and they're receiving Russian fuel through that.
Okay, and we are also focused on, so that's the power companies and utilities. We're also focused on consumer-facing businesses deciding to exclude the Russian market, essentially.
Yeah, so Adidas joining this company of consumer goods companies pulling out. But I have to say, Adidas is going to be moving on multiple geopolitical fronts today. So that's one side of the story. The second side is a new FT report that they're going to replace their head of China operations. This comes after they've been losing market share to a lot of domestic brands. You'll recall there was this consumer boycott over its stance on Xinjiang cotton, already down about 2% on TradeGate this morning.
Danny, thank you very much. Danny Berger with the latest on some of the individual stocks that we are watching. What does all that mean for the start of European equity market trading? Well, not necessarily outperformance in London, at least if the futures are to be believed. We will see what comes to pass in around 6.5 minutes' time. But the European futures picture does look fairly negative, and in the mix we have London futures to the downside as well. So Euro Stoxx 50 futures down by just shy of 2%, and FTSE futures down by 1.5%. So, you know, perhaps a little bit of outperformance there. Nickel really in focus. This is the London price, and this is just one day's move, 71% to the upside in today's session. This follows a 90% move to the upside in yesterday's session. At the close of yesterday, we were at $55,000 a metric ton. This is to do with, there's been a lot of self-sanctioning in this market. Of course, Russia responsible for a large amount of the nickel market globally. And so as a result, we've seen a short squeeze. Anyone who was short of this market, short of nickel, being forced to buy it back at these high levels and in a market that doesn't have a great deal of liquidity. And so as a result, we saw the biggest increase of any metal ever in yesterday's session. So that's the context, and that's why we are talking quite so much about nickel prices this morning. European natural gas futures up by 14%. And this, again, is linked to the war in Ukraine. And we are hearing now from the energy minister over in Russia, Alexander Novak, saying that Russia could cut off gas supplies to Europe through the Nord Stream 1 pipeline. Remember, that is the one that flows through Ukraine. They haven't done that yet. The gas is flowing normally, we're told, by Gazprom today. So that is something we are looking at. It's something that is putting upward pressure on European natural gas prices, as Maria was telling us, up by 14% in this morning's session. And worth looking at some of the havens. Interestingly, not all of the havens getting a huge bid this morning. We don't see necessarily buyers for all along the Treasury curve. We don't necessarily see buyers rushing in to buy the dollar, and euro dollar fairly flat. So FX markets not necessarily responding, but we do see a bit more money going into gold this morning, up 0.9% on the gold price. This is dollars per troy ounce, of course. And we've seen, well, we've broken through $2,000 a troy ounce. We did that just earlier on this week, but then once again this morning, we're nearing 2020 a troy ounce. That would be a 19-month high. Coming up, the market open will be taking place, of course, and the team will be here to take you through that. 4.5 minutes to go until the start of the European Equity Trading Day. Looking for more downside for equities. This is Bloomberg.
Energy prices and a short supply of key chemicals that produce synthetic fertilisers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertiliser helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down. The manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
Welcome to the European Market Open, everyone. A minute to go until the start of cash equity trading. It's going to be volatile and Francine Lacroix here in London. Now, these are your top stories. European gas prices spike again as Russia threatens supply cuts. The EU aims to cut dependence on Russian energy. Metal madness. Nickel soars, touching a record $100,000 a ton. The LME gives an extraordinary reprieve to short sellers. Plus, stocks tank as soaring commodities cloud the economic outlook. Europe's stocks 50 and the Nasdaq fall into bear markets. So you've guessed it, it's all about the markets today. Let's look at the futures. And again, it's not looking pretty. We also have a number of houses where some of the analysts were equity bulls in Europe that are now reversing. And there seems to be a bit of paranoia because we're seeing a flattening yield curve coupled with higher oil prices, coupled with a stock correction, which actually means if you put all of these together, it's going to be a lot more difficult to stay fully invested. The FTSE futures pointing to a lower start, down to some 1.2%. Now, we're just opening up in some of the equity indices, so let's look at commodities. And again, commodities, 126 for Brent oil, gaining some 2.6%. What we're also trying to figure out, if with Brent at 120, we could even see more pressure if Russia really turns off the taps. But with 120 Brent, what does it mean for ECB? What does it mean for Bank of England? And what does it mean for Fed? You can see gas oil. I mean, it's incredible the kind of increase that we see we saw in gas oil in the last 10 days or so. Iron ore also fully supported. And of course, the read across is to some of the countries that are most exposed to some of the currencies. We look at some of the haven bids and you can see the Swiss franc 0.9268. So what's interesting is that because of all these big moves that we saw in commodities, also some of the corrections in equities, we're also seeing a couple of the currency pairs really get slammed. Now, the S&P 500 futures down some 0.8%. And again, nickel, I mean, this is a crazy story because there was a big short. I actually tweeted out something on social media looking at nickel at $100,000. It was short-lived because these things can unwind quite quickly, but it's really quite amazing. Because of some of the short sellers, which also embroils a Chinese company. Look at that. Nickel currently 66.3% higher. Now, Russia threatening to cut off its natural gas supplies to Europe via Nord Stream 1. The move, which would be retaliation for sanctions, could worsen energy market turmoil and drive consumer prices higher. Well, let's get into the key market drivers now with Goldman Sachs Managing Director of European Equity Strategy, Sharon Bell. And we also have Bloomberg's Managing Editor for EMEA Markets Editing Hub, Lynn Thomason. So thank you both for joining us. Sharon, if we look at what we're seeing right now, because of the elevated oil prices, no signs of abating, what does it mean for stocks? Is it the right time to get out even at a loss?
Yeah, I mean, stocks are already in Europe now in a bear market, aren't they? They're down 20%. Euro Stoxx 50 has fallen sharply. I mean, for a long-term investor, probably yes, because I think we will eventually get through this crisis. We're now at valuations which are below average on European companies. I think that for a short-term investor, though, things are still incredibly volatile. Volatility measures are very, very high, so your risk of being in stocks is high at the moment. And yes, valuations below average, but they're not at previous troughs. So if I compare now with, say, the pandemic low or the lows we saw in the financial crisis and the sovereign crisis, we're still at higher valuations than that. And as you mentioned, there's a lot of risk to GDP if Russia cuts off those gas supplies. So risks are still high.
Sharon, what exactly is priced in right now? So is there anything that you'd be buying at the moment because it's been oversold? Or, you know, the paranoia that we were thinking about, it could all, I guess, come to fruition. So better safe than sorry.
Yeah, I think that in terms of what's been priced, I think now with the fall we've seen in stocks, the 20% decline, I think stocks are pricing a modest recession for this year, a very modest downturn and a modest fall in things like PMIs. So PMIs in Europe at the moment are in the mid-50s. It's quite strong, but the last read we had was taken before this crisis. So if we get new reads in the next few months, they are bound to come down. So I think the market's probably pricing those PMIs falling to the high 40s, say, which would be that modest downturn. In terms of where to look, I think companies which will benefit from fiscal spend, governments are going to have to spend a lot more money. Energy stocks looks very interesting as well. I would avoid consumer discretionary names because the consumer is going to be hit by these higher prices.
Sharon, do you worry about the market freezing up? I know we talk about volatility, but if there's some kind of Russian default, and I keep on being told that, you know, this can be largely contained, but what are the risks out there?
It's tricky to know, isn't it? Because, I mean, you can see some of the direct exposures. And you take, for example, the European banks, that the direct exposures are quite small for most banks. And even for the banks where they've got some Russian exposure, it's only a few percentage points normally of their assets in their business. But that can be quite a large portion of their capital. And in some cases may mean that they need to cut dividends or raise capital, etc. So I do think a lot of that now is in the price. The bank stocks that have got these exposures are down 50 or 60%. So I think a lot is in the price, but it depends how confident you are in the medium term.
Let's also, Sharon, bring in our Lynn Thomas. And Lynn, what I was surprised about, and it actually caught a lot of people by surprise, is that there seems to be a delay on how the market was reacting, where actually we knew a lot of the things that we were looking at, apart from the extra retaliation from Russia last week. So what's the market reaction function right now?
Yeah, that's a really good point. I mean, in some sense, it's just sort of catching up to what we're seeing. I mean, I think it's the fear that's setting into the minds of investors that it's that bad, and that, there's going to be this great trickle effect from the higher commodity prices, the higher inflation. And it's quite extraordinary that you hear people talking about stagflation now.
Are we closer to stagflation, Lynn? And is that what's being priced in the markets? It
certainly seems that way. I mean, Leskis was talking about mild recession coming, which is just such a big change from where we were a few months ago. And I think, you just look at for a few months ago, we were talking about stronger growth, and now we're talking about recession, high inflation. It's not hard to see how the picture for a lot of asset prices looks quite weak.
Sharon, is there a part of the market that actually looks safe right now? Do you look at, I don't know if the havens changed, or whether they still look like a good refuge?
Yeah, I mean, when you do get stagflation, as Lynn was saying, this is an incredible transformation in people's views on the market. A few months ago, we had reopening, recovery. Perhaps our biggest fear was rising interest rates. Now our biggest fear is seeing gas cut off, or a huge decline in these asset prices. In terms of safe areas, I think more defensive companies. So literally things like healthcare, for example, which tend to be quite stable earners, great balance sheets, good cash flows, etc. So I think those are places to look when you expect stagflation or a modest downturn.
Lynn, what exactly is going on with nickel? I mean, this is an extraordinary short squeeze, but I've never really seen anything like it.
Unbelievable. I think all of us are just watching in awe of what's going on with nickel prices. I mean, $100,000. I mean, I think in some sense it speaks to how crazy and how just almost unhinged markets have become. It's just absolutely incredible volatility.
Yeah. Sharon, do you worry about liquidity on the markets?
Yeah, I mean, you worry. So there are so many worries at the moment, aren't there? And, for example, this nickel price rise, this is going to have ramifications. Depends on how long it sticks for, but it'll have ramifications for investors. It'll have ramifications for companies that use nickel, etc. And then it'll have ramifications for consumers. So it's all the way down the line. It's inflationary potentially. It's also reducing growth. It's creating problems in supply chains, etc. So I worry about, yes, liquidity in certain assets could be an issue, but I worry also more medium term about blockages to supply chains, in particular caused by things like this, which already supply chains were very tight because of the semis problems, even before all of this.
So, Sharon, are you telling me that actually this could create a major collateral damage that we haven't looked at yet? That actually it's 2-3 days, 2 weeks down the line that we realize the full effect of some of these supply chains?
Yeah, probably. I mean, the market moves fast, doesn't it? And you've already seen the collapse in share prices. And you've already seen, I think, quite a lot of some downside scenarios being discounted. There's a lot of fear in the market as well, which causes prices to come down very, very rapidly. And there's certain areas of the market we think are probably pricing too conservatively now. For example, dividend swap markets are pricing, implying incredibly sharp falls in dividends. And companies have actually got good balance sheets. They're coming into this crisis, if we can call it that, with actually a pretty healthy state of their balance sheets. They're not paying out too much in dividends at the moment. Cash flows are very good. So I think we have to remember pre this, what state the economy was in. We're coming into recovery. We're seeing a reopening, etc. So I don't want to be too gloomy, but yes, some of these supply side issues are going to have effects, and that will mean slightly lower margins and an impact on the consumer too.
All right, we'll talk a lot more about that shortly. Thank you so much, Sharon Bell there from Goldman Sachs, where she's Managing Director of European Equity, and of course, our Lynn Thomason. Both stay with us. Now, energy surge, oil and gas prices have been rising sharply. We'll look at the implications for inflation and central bank policy a little bit later in the program. We also look at nickel. It's been an incredible ride for nickel, so we'll look at metals, mining, and energy shortly. This is Bloomberg.
This chip shortage is going to last longer than many people believe, likely straight through this year. And I wonder what that means for prices. Will this get worse before it gets better?
I don't know that it will get worse before it gets better, but there's no reason to believe it's going to get meaningfully better anytime soon. The Commerce Department put that data out yesterday, and what it showed is that there's a real shortage. Demand is 20% higher than it was a couple of years ago. There's a huge mismatch in supply and demand. Prices are high. Prices are higher. So what has to happen is we need to make more chips. Unfortunately, there's no easy solution. The solution is increased domestic manufacturing of chips, which is what we need to do.
Welcome back to the Open. 11 minutes into European trading day, there's only one story in town. It's oil pushing higher as the U.S. moved a step closer to imposing a ban on Russian crude imports following the invasion of Ukraine, ratcheting up economic pressure on Vladimir Putin. Putin saying that he will retaliate. If you look at European stocks, unchanged, but it's pretty volatile, so it can really change at a moment's notice. With the FTSE gaining some, well, down some 0.4%, but the CAC 40 actually up. I haven't seen a bit of green in European stocks for a while. Gaining some 0.3%. Now, Russia threatening to cut off its natural gas supplies to Europe via Nord Stream 1. The move, which would be retaliation for sanctions, would worsen energy market turmoil and drive consumer prices higher. Now, for more on all of this, we're joined by Bloomberg's European correspondent Maria Tadeo. Maria, can Russia actually cut its gas flow to Europe and sell it to someone else?
Well, Francine, what it shows is that in the eyes of the European Union, this is no longer a credible, reliable partner for the EU. Now, all of this goes back to an interview that Alexander Novak gave yesterday on Russian state TV, in which he says we have a right to counter sanctions. The West is being unfriendly when it comes to Russia and their economic sanctions. So we could do the same on the Nord Stream 1. Remember, this is a pipeline that is still working and still continues to pump gas into this. Now, what we hear is for the time being, Gazprom has always met their obligations. The European Union, however, is on edge about this, particularly after Germany yesterday hinted that it is unrealistic to believe that we can switch off from one day to another. The German chancellor yesterday put out a statement in which he said, we need this for our industries, our everyday lives, and essentially to continue to have a normal winter, we still need this supply.
Maria, thanks so much. I'm Maria Tadeo. They're joining us from Brussels. Now we're back with Sharon Bell, Goldman Sachs Managing Director for European Equity Strategy, and still with us as well, Lynn Thomason from Bloomberg. Sharon, I mean, it's very clear that whatever is driving the markets is the fear of inflation. When it comes to extra subsidies, what role does fiscal spending have in this, and how much can it support a stagflationary economy, be it in the US or Europe?
So I guess I mentioned earlier that companies are actually in a pretty good state when it comes to their balance sheets. They've got a lot of cash flow. Governments probably slightly less so. And the problem for governments is that through the pandemic, they built up quite a lot of debt. That doesn't mean, though, that they can't attempt to provide some fiscal cushion to consumers. And I think in particular, they're going to be looking to provide that cushion to lower end income households that will suffer more, because obviously for those households, they tend to have fewer savings. They built up their savings through the pandemic. And also for them, energy costs are a bigger portion of their expenditure too. So this is going to be a real hit to those households. Governments will want to protect and cushion those households. How do you do that? Interest rates are relatively low. So in that sense, perhaps the fact that governments already have built up quite a lot of debt doesn't matter so much. Also, potentially governments can raise revenues from companies. Higher taxation on the corporate sector as well could be a route for them.
Yeah, and Lynn, I guess the other question is, what does it mean for a lot of the currencies that we're watching? I know the currencies that are very commodity rich, of course, are hit, but we've also seen some funny moves on Euro Swissy, for example.
Yeah, that's a good point as well. I mean, I think clearly across the board, you're seeing the European currencies get hurt. The euro has taken a dive. The pound has been hit, and if anything, it just reinforces the reserve status of the dollar as a currency of safe haven in times like these.
What does it mean, Sharon, also for some of, I mean, we're thinking about electric vehicles, we're thinking about, renewables, and it's unclear. So at the moment, we have reserves which we can tap if Russia cuts off the gas. I don't know for how long, and whether that changes the dynamic in what you're seeing in other parts of ESG.
I think if Russia cuts off the gas, it's going to have a material negative impact on GDP production, everything in Europe. It's going to be a huge negative impact. Germany in particular relies 50% of its sort of gas supply and its energy supply is coming via that gas from Russia. We reckon in terms of German GDP, it would take about 3.5 percentage points of the GDP. That's a huge number to come down. So I think it's material. In terms of what it means for ESG in general, definitely we're going to be pumping, as a continent, much more money into renewables. Already that was happening, but I think more so now. One thing governments have been talking about, and the European Union have been talking about, is reducing the time to get permits and things like that. But all these things take time to do. Even if you reduce the time to get permits, you've still got to get those permits, build, etc. It's not going to be instant.
Sharon, the S&P 500 now index futures actually pairing some of the declines. Trade is little changed. What does it tell us about, I guess, how markets are trying to find their feet? I don't know whether something ugly happens, whether there's some kind of default, Sharon, but talk to us about how this could play out in the markets.
Yeah, I mean, I think markets will be volatile for a little while. And I think, honestly, what normally turns markets eventually after you've had a reasonably large falls we've seen recently, I mean, really, markets need to be confident in growth outcomes. Even if they've downgraded the growth outcome, they need to be confident in where that growth outcome will turn out to be. How much is it downgraded to? And there's so much uncertainty at the moment. There's uncertainty, as we've been discussing, on growth in Europe because of the gas. There's been uncertainty in terms of central bank reactions as well to all of this. We're probably in a stagflationary environment. That's a tricky one. Central banks haven't had to deal with that for a long time. So it's not clear in the very short term what will turn the markets. In the more medium term, I do feel there's a lot of value there. Dividend yields in Europe still look very, very high. Payout ratios are quite low, so companies can afford those dividends. I think over the longer term, companies will rejig their businesses. We've been discussing more renewables, for example. So I don't feel super negative medium term, but in the short term, the volatility. Sorry.
So do you think it's impossible for the Fed to hike? I mean, we had a big banking chief executive saying, look, they should hike no matter what. But it's tricky if you're looking at a stagflationary environment.
It is tricky, absolutely. And none of these central bankers, you'd have to go back a couple of generations of central bankers to find one that really had dealt with a stagflationary environment before. I think in the US, the US is independent on oil. they're self-sufficient on oil and gas and their energy supplies. So they are much less dependent than Europe. Growth is reasonably good there. The labour market is very, very strong. You've never seen these levels of employment and vacancies, etc. So actually, I do think that the Fed will continue to all set with its plan to raise rates, and I don't think this will stop that.
Sharon, thanks so much. Sharon Belder, Goldman Sachs Managing Director of European Equity Strategy. And thanks as well to Lynn Thomason from our markets team. Now, we're just getting some breaking news out of nickel. The London Metal Exchange has suspended trading on nickel. We were looking at actually a 5-year chart. I don't know whether we have it on the screen, but it's been absolutely incredible to watch it. This is a short squeezed, actually embroiling also a Chinese company or a Chinese bank. It touched 100,000. We've never seen anything like it. Then it went back down. The London Metal Exchange has just decided to suspend trading in nickel. So we'll have plenty to look at the metals and mining space, currently at 80,000. Now, coming up, also Gazprom paid its debt, according to bondholders. Will Rosneft do the same this week? Russian corporate debt in focus next. This is Bloomberg.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
But we need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Nickel skyrocketing to record highs earlier today amid a huge short squeeze. Trading now being suspended in nickel on the LME. Let's bring in our Bloomberg's Danny Berger. Danny, this is a huge deal. It touched 100,000 and went back to 80,000, and now it's suspended. I've never seen a metal done like doing that on the London Metal Exchange. And then there's a Chinese bank involved.
Exactly. These are historic moves. This right here doesn't even capture how historic it is. As you say, it doubled in the first 5 hours of trading, fell about 0.25%, 20 minutes later. So here's around where it settled, $80,000, and where it settled for the day because it's suspended for the rest of the day. Now, the Chinese bank you mentioned, this is part of the historic nature of what's going on right now. The LME, according to people familiar, allowed the China Construction Bank more time to meet a margin call that's suspected to be hundreds of millions of dollars. Look, this is a really big problem. If a big Chinese bank can't meet a margin call. This is historic in a lot of measures. Of course, we are getting a reaction from the stock side as well. We do have markets trading, so we might as well show those as well. Emirat, one of the nickel construction stocks that's up about 6%, was up around 10%. Not too much of a reaction from Glencore, but Francine, one of the other potential fallouts are autos, EV makers. They use batteries that have nickel in them, so that could suffer, but at least for the moment, up more than 1%.
Danny, if they can't meet the margin call, and I think the LME is giving them a little bit more time to meet that, if they don't, I mean, this would be the biggest or the first second round effect.
Exactly. I mean, look, not meeting a margin call, this has big ramifications, especially for those taking counterparty risk. Again, this is a China bank. Not meeting a margin call would be massive.
Danny, thanks so much. Danny Berger there with a very close look at nickel, and of course he's going to be on top of that huge story. Now, the big question facing Russian debt owners is whether they ever get their money back. Some holders of a $1.3 billion Gazprom bond due Monday said they were fully repaid in dollars. With the war raging and frozen foreign reserves, the future remains unclear for many other bondholders. Now, we're joined by Bloomberg's distressed debt reporter, Irene Garcia Perez. Irene, thank you for joining us. I mean, the million-dollar question is that there was a bond that was actually meant to be paid out a coupon by Rosneft, and that's been delayed. So will they pay it out?
Yes, they are expected to pay it tomorrow because it was due on Sunday, and then yesterday and today were public holidays in Russia. So apparently that's, just expected. And they are expected to pay in dollars.
Okay, in dollars, because this is a question, right? At some point, and there was a decree done by Putin, first of all, so they rank depending on whether you're a sanctioning country, whether you're a debtor that gets the money first. And then if they pay in ruble, but if you don't have access to ruble, that's basically a default.
Yes. The other, what we're being told is that, yes, that could be a default. And if they are, if the debt is due in dollars and they are paid in rubles, it is a default. But then there's a caveat with Gazprom and Rosneft, and it's that our understanding is that the money was transferred before the decree.
Okay.
So that's one. And the other is that those are entities that had the cash outside of Russia to pay that already. So will we see this again with other debtors? We'll see.
So, Irene, I mean, to understand, what's the motivation of actually paying some of these investors for Russia? I mean, if there's a tit-for-tat war, is it a legal obligation, or they still want to show that they could be open for business?
So it looks like it would be more the later, and also, as in, even with your sanctions, you cannot beat us. We're still delivering, and potentially it is to keep some investors happy, such as China, for instance.
So what happens? So really, the big question is Rosneft. Do they pay? And we'll find out today, I guess, or maybe tomorrow.
Yeah.
So we'll find out tomorrow, and then what happens to the ones after that?
So after that, the Russian government has coupon payments the 16th, and that's a big deal because those are in dollars. If they pay in rubles, it's a default. And then we also have an aircraft leasing company with a coupon payment on Thursday, and that's going to be interesting as well to see.
Irene, thank you so much. Some great, really great reporting I can't tell you how important this is for a lot of our viewers and people watching. Irene Garcia Perez there and some of the bondholders looking at Russia. Coming up later, energy in focus as war in Europe continues to shock commodities. Don't miss our Price of Power special at 9:30 a.m. London time. Up next, Energy Aspects founder and director of research, Amrita Sen. This is Bloomberg.
nuestro estudio, en nuestro experimento, no hemos pintado todos los edificios de blanco, sino estos más asequibles de pintar. Y ya hemos detectado reducciones medias en el área metropolitana de 0,8 grados aproximadamente en un periodo de ola de calor y con picos máximos de 4 grados de disminución en un momento puntual del día, en una zona puntual del día. Y como dices, en una ciudad como Barcelona funciona incluso mejor que las zonas verdes, según las modificaciones nos detectan incrementos, o sea, disminuciones de temperaturas mayores con tejados blancos que con incrementos de zonas verdes como tienen planteados el plan director urbanístico.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Welcome back to The Open, everyone. We're 30 minutes into the European trading day, and here are your top stories. European gas prices spike again as Russia threatens supply cuts. The EU aims to cut dependence on Russian energy. Nickel soars, touching a record $100,000 a ton. The LME suspends trading in the metal after the unprecedented price spike. Plus, European stocks trade higher after entering a bear market yesterday. So it's all about the markets, but also a big story coming out of the EU that could be unprecedented in terms of a joint issuance on bonds. This is a Bloomberg scoop. We understand that the EU will unveil a plan as soon as this week to jointly issue bonds on a potentially massive scale to finance energy and defense spending in the 27 member states. Now, that could, of course, lead to a lot more. I wonder whether that's what the markets seem to be liking at the moment, because as more and more you have coordination amongst states, it could even mean for some fiscal support, and that means that European stocks down yesterday at the lowest in a year now are edging a little bit higher. Now, banks leading the gains, they were really slammed yesterday. Medium basic resources stocks amongst some of the biggest decliners. This is what German Bund yields are doing. You can see the 5-year at minus 0.2%. Investors really now concerned that the jump in energy prices will stall economic growth at a time when inflation is already surging, and the word stagflation is there more and more. Let's also look at some of the sectors on the move. I was mentioning that some of the banks are seeing a bit of a reversal. This seems to be one of the most significant things, just given the turmoil that we saw yesterday. Again, a lot of chief executives, a lot of compliance officers now wading through, I'm sure, what some of their trading desks are holding, their exposure to Russia. And then, of course, the big story of the day is what's going on with nickel. So the LME suspending nickel trading after huge, crazy swings. You can see it stabilized because they suspended it at $80,000 a ton. It was over $100,000. And they basically say that this is an unprecedented price spike. I have to say, it also left a broker struggling to pay margin calls against deeply unprofitable short positions. And this is embroiling also a Chinese bank. So our Danny Berger was explaining that they have extra time to play that margin. If they can't put up the money, then all bets are off. This is a unit of the China Construction Bank Corporation. So oil pushing higher still as the U.S. moved a step closer to imposing a ban on Russian crude imports following its invasion of Ukraine. Futures in New York rose to near $123 a barrel after settling at the highest level since 2008 on Monday. Oil rallying more than 30% since the invasion. Well, joining us now is Amrita Sen, founder and director of research at Energy Aspects. Amrita, thank you so much for joining us as always. I mean, really, is there any chance that oil doesn't go higher from here if we're going to see retaliation? And of course, now we talk about the possible suspension of Nord Stream 1.
No, I mean, look, it is going to be heading higher. Obviously, it's never going to be in a straight line. Potentially, Iranian barrels could come back. U.S. is also talking to Venezuela about potentially releasing removing some sanctions. We don't think it's quite there yet. But yes, of course, might get a few corrections on the way, but ultimately this is headed way, way higher.
So what does that mean, Amrita, in terms of what we should be looking out for? Way higher is what, 185? Can we reach 200? And what happens to demand then?
I mean, I would say you need at least 150, if not higher, for a material slowdown in demand growth. And I think that's the big issue we have right now. In a post-pandemic kind of recovery phase, demand is growing pretty rapidly right now. And even at these price levels, we aren't seeing any kind of significant slowdown in demand. And the other issue is a lot of countries are actually bringing back subsidies because of such high prices. So consumers aren't fully seeing these prices either.
Why is Saudi Arabia and OPEC Plus not stepping in?
I think it's a very complicated situation for them. Russia is ultimately a member of OPEC Plus. And if you think about it, I mean, this is not something, this situation hasn't been created by them. And ultimately, they also don't have a lot of spare capacity, something we've been talking about for some time. If Saudi Arabia and UAE, let's say they bring all of their spare capacity to the market right now, in the summer when demand could be even higher, what happens then? So they do have to manage this very, very carefully.
Amrita, what does it mean for longer term, first of all, of the viability of OPEC Plus? Do they actually stay as a group, or does it get dismantled?
We've had conflicts within member countries of OPEC Plus before. I mean, if you think about Iraq and Kuwait, Venezuela's been under sanctions, Iran's been under sanctions, but the group has been successful in navigating challenges like that in the past, and I don't think that's going to be any different this time around either.
Amrita, give me a sense of how possible it is for the EU to meet its target of, reducing Russian gas dependency by 80% this year. How feasible is that? It seems like it's almost impossible without the help further afield.
No, I don't think those numbers are realistic. And I think even the IEA came out and said that, of course, yes, you could reduce it, let's say, by about a third, but you will still need at least 100 BCM of gas for Europe as a whole from Russia. And I think any kind of numbers or any predictions that says we could get rid of Russian gas overnight is extremely optimistic. And where is this LNG going to come from? Asia has had a relatively warm winter, and that's why we've had the luxury of seeing some of these cargoes come to Europe. But after this crisis, Asia is going to absolutely bid cargoes away from Europe. So we simply just don't have that volume of supplies elsewhere available.
So what happens, actually, concretely? Is it all talk?
No, I mean, I think we are going to start to see rationing, and you've seen Germany, for instance, talk about that. Industry will need to reduce their intake of gas, and similarly, what we're talking about in oil. Supply rationing is going to be a pretty grim, but a reality potentially if we continue on this path. And that's the only way to balance this market. Again, it goes back to prices and it goes back to how demand reacts rather than via higher supplies, because there just isn't any in either oil or gas.
Yeah. Amrita, is Russian oil increasingly becoming untouchable for traders? And who does Russia then sell it to?
Well, China is starting to buy Russian oil again. We've seen ESPO cargoes trade there. Discounted Urals cargoes are slowly heading there. It's the shipping concerns that have kept things slow moving east, and shipping rates are very, very high right now because of the war premium. India is open to buying Russian oil as well, so we do expect more intake of Russian oil in the east. But yeah, Europe is very reluctant. The pipeline is still flowing. We expect that to continue for now. But yes, in terms of waterborne cargoes, it's going to have to be the east that soaks up at least a majority of what is unsold. Don't think the east will be able to take everything, but at least 50 to 60% should be able to flow there.
Amrita, going back to demand destruction, so you say it starts, I think, at $150. Where does demand get destroyed first? Is it in Asia, or will they have access to the Russian oil? How does it play out?
Well, I think it's going to be Europe that's the worst affected and worst hit, because it's both oil and gas. We've already seen very high inflationary environment in both Europe and the US, and that's where economic growth comes off first, and that's kind of where the biggest hit to consumers is. So it's Europe, then US. Asia, in some ways, of course, could benefit from slightly cheaper oil, particularly China and India, if they are able to buy these discounted cargoes.
All right, thank you so much. Amrita Sender, founder and director of research at Energy Aspects. Now, coming up, Hargreaves Lansdowne senior analyst Susanna Streeter on the fallout from Russia's invasion of Ukraine. That's coming up shortly, and this is Bloomberg.
you do any kind of business in this country, there's a pretty good chance that you're going to see that business registered in Delaware. Why? Because that's where you do it. And our point was Wyoming can be that venue for blockchain enterprise, for crypto.
It's not the Wyoming way to sit around and wait for change. We want that independence, we want that freedom, we want that individuality. And that's a common theme that brings together bipartisan support for this in Wyoming.
We want to make sure that people understand, especially in Wyoming, but as the United States as a whole, this trend is coming. It's not going to stop. This is more of a small town that's growing into what I would call the cryptocurrency version of Silicon Valley.
It's the philosophy of that rugged individualism, the independence, and the ability to really get things done for yourself and control your own destiny. You get that from a blockchain, and you don't get that without it.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Welcome back to the Open, everyone. 41 minutes into the European trading day. We're not lacking news. We are seeing a bit of a reversal when it comes to these European stocks. Oil still, though, very, very elevated. Now, I have to say, stocks are actually advancing on this EU bond sale. So the European Union, we understand it's through our Bloomberg reporting and scoop, is considering these joint bonds to finance energy and defense spending as a bloc tries to cope with the fallout of Russia's invasion of Ukraine. Now, that's giving a bit of a mood boost because it also means that fiscal spending is there, and maybe some of the rules that apply to the EU will be left to one side for the time being. Now, also, nickel onto metals skyrocketing to record highs earlier today amid a huge short squeeze. Trading has now been suspended in nickel on the LME. Let's bring in our Bloomberg reporter, Danny Berger. Danny, I mean, I've never seen anything like it. It was like 100,000, then it went to 80,000, and the LME said, all right, let's hit the pause button and give them a bit more time to meet the margin call.
Yeah, this is extreme volatility. This is the unmistakable look of a short squeeze. When you see something like this, I mean, look, it's reminiscent of a meme stock, Francine, in January 2021. It looks like GameStop, but yes, it doubles. It then drops about $8,000. It settles around $80,000 before the LME suspends trading. Now, we know, according to sources telling Bloomberg, that the LME specifically is allowing the Chinese Construction Bank, one of the big four banks in China, more time to meet a margin call. But look, it's likely that a lot more people got caught up in this, Francine. But again, we should reiterate, Chinese Construction Bank, this is a big bank. Not being able to meet a margin call, it might have to do with some of their clients rather not meeting the margin call because it was done through one of their trading units, but still, this is unprecedented, the LME allowing people more time to meet a margin call.
So, Dan, if you don't meet a margin call, then really all bets are off. And so we don't know actually who that client is on behalf of the Chinese bank, right?
Exactly, exactly. But look, this is when you start talking about liquidations. This is when you start talking about firms shutting down. If anything, these are the kinds of moves that can inject counterparty risk and inject fire sales as well. We're looking at a little bit of how nickel is used. Of course, there are consequences as well for high prices of nickel that feed into other assets. But again, Francine, just on a fund-by-fund basis, if you can't meet a margin call, that spells a lot of risk. We've had a lot of recent historical examples. I'm thinking of Archegos when you can't meet margin calls. It has serious ramifications.
Yeah, it certainly has. I mean, this could be the first second-round effect of what we've seen over the last 10 days. Danny, thanks so much, as always, for great reporting and anchoring Danny Berger there. Now let's get straight to Susanna Streeter, Senior Investment Markets Analyst at Hargreaves Lansdown. And Susanna, this goes back to, we could see something ugly, a part of the market either freezing or a margin call that's not met, and the timeline in which we could see that. How close are we to that?
It's very difficult to say because day by day we're seeing this volatility. Obviously, volatility that we're seeing today, as far as nickel is concerned, is pretty unprecedented. And I think what the market is doing is watching very closely for any nugget of information that could tip it over into that scenario. But certainly, I would say that pretty much on tenterhooks right now. And obviously, nickel supplies from Russia have come under extreme pressure. And, you know, this is crucial as well if you look at the longer picture, because if Germany and other countries want to take a longer view and wean their economies off Russian energy, that's that gradual shift or accelerated shift that we need to see right now towards renewables. Nickel's needed for electric vehicles. You know, all of these avenues, you seem to be hitting a brick wall in terms of the supply of raw materials needed to effect what really needs to be a revolution in change.
So, Susanna, how long does it take for the market to work through some of these questions?
It's very difficult. And I think what we're seeing is this kind of day by day clinging on to any kind of sniff of good news. As you already indicated, we've seen a bit more calm descent on European indices today, perhaps in that hope that if supplies are turned off in a kind of worst case scenario in terms of energy supply, because of course, as far as the US is concerned, that option is still very much on the table, that this will give governments a bit more money to be able to fight the latest kind of economic crisis that would emerge if that were to be the case. And certainly what there will be a need for, even right now, is looking towards the autumn, some kind of real fiscal stimulus to enable consumers and potentially businesses to survive these crippling energy costs.
Susanna, the markets are seeing a bit of a reversal on this Bloomberg scoop that the EU will unveil a plan as soon as this week, possibly to consider this massive joint bond sales to fund energy and defense. How much of a game changer would that be?
Yes, well, I do actually think it would give them a security blanket for different scenarios which are unfold, because I think that's what the market is looking at right now, looking at all of these different options. And you talk about the military spending. We had that real surprise announcement in terms of Germany's strategy for military spending, increasing the contribution to the NATO alliance and also bolstering its individual defence budget. But what's going to be key as well is ring-fencing some of those funds to help the economies and to provide extra stimulus, I think, if we are going to see this energy crunch continue, because we are going to face a prospect of European companies really facing very difficult times in terms of being competitive with sky-high energy costs. And also the effect on consumers can't be underestimated. And remember, we have a number of, an election due in France, and also, repercussions for countries if citizens can't afford to heat or eat. They have to make those very difficult choices going forward. And so that will be close to, forefront of their minds as well.
Susanna, what does it mean for being fully invested? So there's a number of equity bulls in Europe that have constantly said, look, things are turning for Europe, it'll be okay, that now are coming back on their cause because we just don't know the secondary effects, third round effects, and also oil at 125. What does that mean for the ECB, Europe being, of course, the one that's most directly hit? So what's your call on some of the equity strategy going forward?
Well, the equity strategies going forward, I think certainly it has to be diversification and really making sure the portfolios have a lot of ballast and looking at different asset classes as well. Certainly diversification is key right now, and that's certainly what we've been seeing among our clients, a real switch to multi-asset funds, and certainly with a global perspective. I do think looking at the ECB, there will be question marks raised now about whether it will raise rates at the end of the year, certainly with the extra stimulus needed for various economies going forward. I think that's been put into question.
All right, thanks so much. Susanna Streeter, their senior investment and markets analyst at Hargreaves Lansdowne. Now, coming up, the fallout from Russia's invasion may prompt Chinese leaders to think twice about taking Taiwan by force. So we'll discuss today's big take. That's coming up next, and this is Bloomberg.
Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. SpiceJet Chairman Ajay Singh earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. Celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet Chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Welcome back to the Open, everyone. 52 minutes into the trading day, we're seeing a reversal, clear reversal when it comes to European stocks gaining some 0.6%. The main story, of course, is this possible joint issuance. It's a Bloomberg scoop, and we understand that this will be a proposal for the EU leaders to vote on. It would be a massive joint bond sale to then fund energy and defense. Now, Russia and Ukraine have said they will continue to hold talks on a potential ceasefire, although Monday's third round of discussions in Belarus produced little progress. Well, joining us now is Bloomberg's international government executive editor, Roz Matheson. Roz, thank you so much for making the time to be with us, because I know how busy you've been. First of all, there's a narrative, it seems, in a lot of our press saying that Putin miscalculated this. Is this war going how he wanted it to?
You'd imagine that there are challenges that are showing up for the Russian president in all of this, because this war, as it gets close to the 2-week mark, is probably not moving as fast as he would have anticipated. Certainly, Russian forces are very bogged down still outside the capital and facing severe logistical challenges on the ground. Nonetheless, they just seem to have not really understood the likely extent of the Ukrainian resistance, which has been formidable throughout so far and certainly has stopped them in their tracks in several places. So probably not proceeding at the pace he would like. The costs are obviously increasing also for him. At the same time, in the end, Russia's forces are probably superior to those inside Ukraine. Will they overwhelm Ukraine? Possibly. It might take a lot longer than they had expected. They haven't really deployed most of their air force yet, and that's something that we could imagine seeing that start to happen a bit more. They haven't really dominated the airspace, and yet they do have the air power to do so.
It's unclear to me what the end game would be if Russia were to actually take over Ukraine, and there was a thread going around on social media over the weekend. Then what do they do with Ukraine? I mean, how many troops would they have to post there to keep a hold of this country?
Well, that's the question also. It's one thing to invade a country, it's another to deal with the aftermath of that. So the question is, do they want to have control of Ukraine via the government in Kiev? Do they want to try and break Ukraine up into smaller pieces and have them micro-governed by proxy? Because there are, you know, in Western Ukraine, for example, it's extremely pro-Europe. You can't imagine that they would just tolerate a very pro-Russia government there. So do you divide it up into different pieces, and then how do you control it at that point? Or do you simply say, if you get a government that's willing to recognize the separatist areas in the east once and for all as independent, separate Russia states, is that enough? But it's just very clear that overall what he wants is Ukraine to be demilitarized and under Russian control.
Roz, the fallout from Russia's invasion, does it prompt actually Chinese leaders to think twice about what they want to do with Taiwan? This is our big take today.
That's right. There are obviously a lot of people wondering how the events that are happening between Russia and Ukraine might be interpreted by China, because, of course, China itself sees Taiwan as its territory, even though that's a democratically run island that says that it has its own status. China has long viewed Taiwan as part of its territory, similarly as Russia has viewed Ukraine as part of it. And the question is, does Xi Jinping take any lessons from what's happening at the moment away? That said, I don't think anyone thought that an invasion of Taiwan was imminent or likely in the near term. Certainly Xi Jinping needs very much stability at home domestically this year, in a year that he's seeking to get re-endorsed for an unprecedented third term. And creating a war in Taiwan is not going to lend itself to that push for stability. He may be also taking some cues just by the extent of the Ukrainian resistance to the Russian invasion so far, and you certainly expect Taiwan to be no different in that regard.
Roz, thank you so much. Of course, China's stance on the conflict has also shifted with events of the ground. Roz Matheson, who heads all of our government coverage. You can also get more on our Big Take on the website, Bloomberg.com, on the terminal. Type in NI Big Take, and I'll also push it out on social media. Now, that's it for the European Market Open. Surveillance early edition is up next. We'll look at the fallout when it comes to energy prices. We'll have a big focus, of course, on energy. We have a half-an-hour special called The Price of Power, and the other big story is, of course, the EU considering this massive joint bond sales to fund energy and defense.
Going to primarily be chips for your own business, or is this going to be more centered around the foundry business and external customers?
It's going to be both. And what we said today is we're announcing 2 fab modules. It's a large location, 1,000 acres, because I'd hope to build out a full 8 fabs or more on this location. And, you know, if we do that full project, it would be $100 billion over the course of the decade or so. So a massive project, initially 3,000 jobs, 7,000 construction workers, supply chain, et cetera. I mean, this is just fabulous. And the products will be our most leading edge chips. So as we said, this will be the angstrom era when we're going to 2 nanometers and below into the angstrom era. So it'll be the most advanced chips, potentially the largest manufacturing location in the world. We'll use its output for our internal products, but also for those of the foundry customers as well. So it's going to cover both.
Good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Here's what's coming up on today's program. Russia threatens to cut gas supplies to Europe via Nord Stream 1. The EU is dropping up plans to limit its reliance on Russian energy. Red-hot nickel sees an unprecedented spike to hit a record high. The London Metal Exchange is forced to suspend trading. And later this hour, it's Bloomberg's Price of Power, where we look at the latest moves in energy prices. We speak exclusively to the chief executive of the French utility, ENGIE, Catherine McGregor, and to the IEA executive director, Fatih Birol. You can send in your questions on IB plus TV Go. You can also reach out on Twitter directly. Now, first thing is first, let's check in on the markets. And the story is a reversal when it comes to European stock 600. Remember, it was only yesterday that a lot of these indices were at the lowest in 12 months. The focus is actually on this nice Bloomberg scoop talking about joint issuance, that big joint issuance from the EU countries to fund defense and energy. Now, this is just a proposal, but there is a belief in the markets that maybe they will come together, given the coming together of world nations to actually sanction Russia after the war in Ukraine. So European stocks gaining some 0.9%. It's a lot of course, the repricing that we saw when it comes to Brent oil, what that means for the ECB, the Fed, and the Bank of England. The bigger picture, longer term, is what does it mean for valuation. Now, the 10-year German bond, of course, extremely sensitive for any bond issuance, currently at 0.064. Natural gas, you can see, still gaining some 6.3%, what that means for stagflation and how central banks will react. And then nickel, 80,000. This is an incredible story. We're looking at it just an hour ago at 100,000. Then it's come back a little bit. This is on the margin call. Now, the LME decided actually to suspend trading full nickel for the moment. We understand that there's a Chinese bank that's embroiled in all of this because one of their clients needed to meet a margin call, and the LME said they will give them a bit more time to see whether they do. If they don't, this would be one of the biggest second-round effects that we've seen since the war started. And, of course, the end game and the third-round effect of that for the moment is pretty unclear. All right, you can see the FTSE here in the UK gaining some 0.5%. A lot of banks are supported this. They were the ones that were being slammed yesterday, and the DAX gaining some 1.4%. Now, Russia threatening to cut off its natural gas supplies to Europe via Nord Stream 1. The move, which would be retaliation for sanctions, could actually worsen energy market turmoil and drive consumer prices higher. Well, joining us now is Bloomberg's European correspondent, Maria Tadeo. Maria, so, I mean, Russia could actually cut its gas flow to Europe. What does it mean for energy dependency? And do we have enough stockpiles to make up for that lost Russian gas and oil?
Well, they could, and so far they haven't done this. You know, they've kept supply very tight, but nonetheless, Gazprom has pretty much honored every contract. But yesterday, Alexander Novak went on Russian state TV at night, and he said Russia has a right to counter sanctions, and that could mean, well, ditching that Nord Stream pipeline 1 and, of course, not supplying through that. And then that would mean a catastrophic fallout for the world economy. He even said, he put a price on this, Francine, saying we could see $300 a barrel for oil. Now, when it comes to the European Union, now this morning what they say is that this proves that sanctions are working. They bite, and they bite hard, and now Russia's making threats again. They say that it also shows in many ways that Russia is no longer a reliable partner for the European Union. Now, that is on paper, but in reality, we know that this could be a real concern for countries that do still take Russian energy because, well, they need it. And then yesterday, the Germans made it clear, if we switch from one day to another, we're going to have problem in our industries, heating up our homes and having a normal life.
So, Maria, Bloomberg also reporting this morning that the EU is considering this massive joint bond issuance to fund energy and to fund defense. I mean, this would be huge and be a huge game changer. What's the likelihood of this happening?
Well, you know, Francine, in theory, what we hear is that this would work and operate in many ways that would look like the next generation EU. Remember, this was this pooled joint fund in which the Commission, which is AAA rated bonds, including the other institutions, well, they tap the market, they bring in the revenue, and then, of course, they assign it to each country based on GDP and other criteria. Now, what we hear is that this could work in many ways that are similar to that. It will be presented to European leaders when they meet in Paris on Thursday, Friday. What we hear is that this is a very early days project, but nonetheless, what they need now is a political approval and a political green light to it. If that happens on Friday, then the Commission can get to work on the technicalities. But I did have a source tell me, jokingly, but nonetheless, it does give you an indication of what they feel, that Vladimir Putin is doing something that's never happened before, get a fiscal union to back up European defense spending.
All right, thanks so much. Maria Tadeo there in Brussels for us. Now, later this hour, it's a Bloomberg Price of Power, where we look at the latest moves in energy prices. We speak exclusively to the chief executive of the French utility, Engie, Catherine McGregor, and to the IEA executive director, Fatih Birol. Now, you can send in your questions on IB Plus TV Go. Now, to look at the markets, to look at the volatility and some of the things out there, we're joined by Jane Foley, head of FX strategy at Rabobank, to discuss the latest market moves. Jane, I have 1,000,001 questions, so thank you so much for showing up this morning to be grilled. First of all, what do you do with a lot of these currencies? So the currencies, even if you look at what happened to Euro, Swiss, I mean, they're really on the move, but then you have to ask yourselves, okay, ruble, should we just forget about it? And then some of the currency that are very commodity rich.
Well, I think for the ruble, yeah, I think forget about it. I don't think the price on the screen really is a reality of the price. But, you know, some patterns have been emerging, and those patterns, certainly in the G10, have been really put on the head this morning. So the patterns that had been emerging really over the last couple of weeks had been, you know, the bottom of the G10 table was stocky, performing badly, along with those Eastern European currencies, of course, euro quite near the bottom of the table. And at the top were those commodity currencies, the Aussie, for instance, the New Zealand dollar, the Canada, the dollar, and the yen and the Swiss franc, sterling, you know, somewhere sandwiched in the middle. But of course, if we look at the performance table today, what do we see? We see the stocky coming back, we see the NOK coming back. And so some of those European currencies, given this reprieve by this news, that of course the Europeans could be coming together and they could potentially issue debt.
Yeah, I mean, the concern is that, of course, maybe they don't, right? This is a report that they're talking about. It's on the table. We've never seen something like this on the table. But what if someone says, no, because actually it's too much fiscal spending and it's just not the right time? Then do we have just a lot more volatility in currencies?
I think we do. I mean, you know, that news stories, I think, evoke memories of the recovery funds. It's something that came in after the start of the pandemic, you know, when the fiscal authorities in Europe were coming together. There was suddenly some sort of glue in those fiscal authorities that had always been lacked, you know, since the start of the euro back in 1999. And that really formed this idea that maybe the euro could, after all, you know, be some sort of safe haven, because if they were issuing debt, there was somewhere for safe haven buyers to go.
Yeah, but if 40% of your energy is from Russia, I mean, I don't know what fiscal spending, even if you throw everything, kitchen sink at fiscal spending, like what can it actually do?
You know, I would agree with that, and I think today's reaction that's been turned on its head is perhaps short term. We need something more solid before we can go further. And I think the reality is that Europe's energy security there's a massive question mark. There's a massive fog, therefore, over the economic outlook for the Eurozone. Will it go into recession? You know, can it avoid recession? And that sort of fog, and therefore the fog over the ECB policy, means that there's that big cloud of uncertainty over European currencies, and that will remain until we get more concrete news.
Yeah, and Jane, I don't want to pour water on this because you know, the fact that the EU is even considering this massive joint bond sale to fund, you know, energy and defense is huge. But again, does it actually, you know, help with stagflation, or is this something that we just need to get used to?
Stagflation is here anyway. I think we know that. We know that we have the risk of higher prices. Yeah. It's very difficult now to see Eurozone inflation, you know, below that 5% level, you know, on an average, say, for the rest of this year. We know that we're going to have slower growth. We know that higher energy prices takes money out of consumers' pockets, and therefore there's going to be less demand and everything else. So that we know that we have those two things. We know that we're going to have higher inflation and lower growth. However, if the European authorities can do more on the fiscal front, if they can show more of a united front, if they can show that sort of cohesion that's always been lacking, that economists were worried about back in the 1990s at the start of EMU, that is a massive step forward for the euro, and it does alter structurally the outlook. So this is really big news, but of course we need more details before we can, you know, really be confident about this. So it is a big step forward, but for the time being, certainly over the weeks ahead, most of those clouds over the euro and European currencies are still there.
Jane, my fear from the very beginning was that there was a second, you know, round effect on something, and I kept on being told, no, it's okay, we can freeze out Russia without really anything happening. Now there's, you know, nickel is a huge concern, and a Chinese bank is embroiled. But what's liquidity like in currency markets?
Well, you know, I think it depends which currencies that you're looking at. I mean, certainly, as I said, we can forget about the Russian ruble. People can't really trade with their Russian counterparts at all, so therefore the liquidity is gone. I think if we look more in the staples, if we look at euro dollar, I don't think liquidity is a problem at all. So clearly it depends where you're looking. I'm not sure about the Eastern Europeans, but I would imagine that there's probably less liquidity there than perhaps normal. And certainly if we look at what happened in nickel yesterday, liquidity was a huge example of what happens when liquidity dries up. So we know that it is a problem. I think you're right to be worried about second order effects. I think, you know, we've got nickel that will affect potentially the manufacture of EVs and other batteries. But I think before that, we've got to consider food production. And I think that's been a concern over over the last couple of weeks. And I think really for people in North Africa, for instance, who had been reliant on wheat from the Black Sea area, this is a massive concern and something which will perhaps almost certainly affect Europe, perhaps with another wave of refugees.
Jane, thank you so much. Jane Foley, head of FX strategy at Rabobank, stays with us. So we'll talk a lot more, of course, about some of the third round effects, of course, the influx of refugees, what that means also for spending across the board. Now, later this hour, Bloomberg Price of Power, where we look at the latest moves in energy prices. We speak exclusively to the chief executive of the French utility, Engie, Catherine McGregor, and to the IEA executive director, Fatih Birol. You can send in your questions on IB Plus TV Go. This is Bloomberg.
First step in building a Connect home is to get your hands on some brains and then cut them up. It all sounds very grim, but Harvard turns out to be quite efficient with its brain harvesting. Jeff's lab can do a year's worth of research with a single mouse brain. Small chunks of the brain are fed into the slicer, where a diamond blade carves off a thin sliver of tissue. The tissue floats along some liquid and onto a piece of tape. The brain slices are then put into this very large machine, where they're photographed in the finest of detail. Software helps stitch the pictures back together into a single 3D image, and algorithms are applied to help make sense of what's going on inside of the brain.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, the big question facing Russian debt owners is, of course, whether they ever get their money back. Some holders of $1.3 billion Gazprom bonds due Monday said they were repaid in full and in dollars. But with a war raging and frozen foreign reserves, the future, of course, remains very unclear for many other bondholders. So we're now joined by Bloomberg's distressed debt reporter, René Garcia Perez, who's been doing some really great reporting on all of this. So Gazprom, René, paid. What about Rosneft?
Rosneft is expected to pay tomorrow. It had to pay on Sunday, but it was a public holiday in Russia today and yesterday, so it's expected tomorrow.
So and you were explaining to me, and I've been trying to follow it very closely, that there was basically a decree by Putin on Sunday saying if you're someone that is giving me anxiousness or putting on sanctions like the UK and the US, and you're a bondholder, you go to the bottom of the list. But are these affected by that decree, these two coupon payments?
In theory, yes, but the caveat with those is that the money was transferred before the decree, or that's our understanding. And the other thing is that they had the money, it's European subsidiaries, they had the money already outside of Russia.
Yeah. So can we just make it clear, if they pay back in ruble, this is basically a default?
Yes, unless creditors agree to be paid in rubles.
Right, because we don't have access to it, you'd have to open a ruble bank account. So it's basically like saying, guys, we won't pay you.
You can't unilaterally decide as a debtor to pay in something else than what you agreed on the documents.
So I keep on hearing, from Russia, the Russian side is retaliation. We're also looking at Nord Stream 2 and possibly Nord Stream 1 and closing off the taps. Why would there be in their interest to actually pay bondholders at this point for Rosneft?
So, well, for for anyone, avoiding default is about having access to capital markets. Now, this seems tricky anyway for some time. But the idea, at least for the sovereign, the corporates might be different, but for the sovereign is to show strength and that, despite the sanctions, we are still delivering. And also to keep other investors happy, mainly China in this case.
All right, Irene, thank you so much. Irene Garcia Perez there with some of great reporting, really, to understand exactly what's going on in the markets. Now, let's talk more about the broader markets with our Lim Thomason, who follows markets for us. And we're back with Jane Foley, head of FX strategy at Rabobank. Jane, look at this chart. It's a great chart because we're talking about some of the currencies of commodity and energy exporters, Indonesia, Malaysia, Australia. They've unsurprisingly been more resilient. But look at this chart. The flip side to all of this is basically that the Chinese yuan's piercing through the roof against the trade-weighted baskets. And you can see that quite clearly on the chart on the screen. So, as Russia is increasingly cut off, can yuan kind of emerge as a global currency?
Well, this is a very topical discussion. I mean, what we've got to remember is this is a managed exchange rate. Yeah. So this is not, it's perhaps not right to compare it to some other freely floating exchange rates. But there has, of course, been a lot of reports recently about, what countries can do if they want to bypass SWIFT. And, of course, a lot of these discussions about bypassing SWIFT have been going on for years because, Russia, of course, had sanctions back in 2014. We've seen after the US pulled out of the Iranian nuclear accord, we saw Europe actually, trying to bypass the dollar and using a different payment system to deal with Iran. So from that point of view, this is a really topical discussion. Now, China has been quite successful in some parts in having more Chinese yuan invoicing and having different payments that avoid SWIFT, that avoid US dollars. But we're looking at, really small amounts compared with SWIFT. So what we're seeing is that we are seeing this movement of some parts of the world, Russia, China, the EU, trying to bypass the dollar payment system. But I think we're talking about a 10-year conversation, really, not something that's really going to have an impact over the next year or two.
Yeah, it's amazing how actually we seem to be so short-term at the moment because we're trying to figure out exactly the fallout effects. Lynn, give me a sense of what's happening with nickel. So our Danny Berger has been doing some research, also went historically back to the last time that the LME suspended a metal, and that was in 1985, and they suspended tin trading for 4 years. I mean, this is a completely different story because it's about margin calls. But, what's the situation with nickel and who it could bring down with it?
Yeah, absolutely. I mean, nickel is absolutely a crazy story today, and I think one that we're all watching. For me, sort of the interesting thing to look for is what does it mean for the LME in sort of controlling this volatility or managing these extremely, big shifts in markets that we're seeing. And I think, just the fact that you're seeing the trading halt today certainly raises some questions as to what's going to happen next.
Jane, let's also look at some of the, the signs of U.S. dollar fund stressing, and we have a good chart looking at that. I think our Valerie put it together. It's number 1392 if you're following on the Bloomberg terminal. But what does this show us?
But again, there is some stress in funding. I mean, that's almost inevitable. We have the signs of panic overlaying certain markets. I mean, certainly if you look at, again, wheat, if you look at the futures, the CBOT, if you look at nickel, is it a surprise if you look at Russian ruble, if you look at some of the Eastern Europeans? So again, there is stress in the market, and this is basically what this is telling us. What we want to know is whether or not there has to be a response at this point from central banks, whether or not there's enough liquidity in the market, whether or not we're going to see anything on that front. And that might come if signs of stress do worsen.
Are we underestimating, Jane, the impact that actually wheat prices have on, global inflation outlook, food prices? We're talking about refugees, that just the world is going to get a whole lot worse before it gets better.
I think it's easy if you're sitting in a rich country to underestimate that sort of impact. I mean, we will be looking at higher prices for our wheat products. If you were based maybe in North Africa, you are looking at a lack of alternatives that you would have. So I think we are potentially looking at, degrees of hunger for certain groups of people in some of the poorest countries in the world. And that is something that for us sitting in rich countries, we cannot ignore. So we are potentially looking at more refugees unless this calms quickly. Now, we've got to remember that the harvest season for the Black Sea area is sort of June, July, and that's going to be really important. If the sanctions are still there, if the difficulty getting shipping in and out of those ports in the Black Sea are still there in the June-July period and just beyond, then that could be really critical.
Yeah, and we have there actually a quote by Elon Musk. First, Nicole, one of the things that's most used in electric vehicles, it could also delay some of that impact on ESG. Lynn, talk to me a bit about, the EU considering this massive joint bond sales to fund energy and defense. That's really what's giving a lift to a lot of the markets, where yesterday they were slammed because they were worrying about inflation. But could this be a short-lived bounce?
It certainly seems that way at the moment. I think, looking beyond the move today, there's still a lot of questions as to what happens in markets and how people can deal with the inflation shock that's coming. I thought, the comments about agriculture prices were really spot on. Food and hunger is going to be a massive issue for a lot of global economies coming up.
All right, thank you both for joining us. Lynn Thomason and Jane Foley, Head of FX Strategy at Rabobank. Now, we'll have plenty more, of course, on nickel, metals, energy. We'll talk a little bit about what the EU can do later this hour. It's Bloomberg's Price of Power, where we look at the latest moves in energy prices. We speak exclusively to the Chief Executive of the French utility ENGIE, that is Catherine McGregor, and to the IEA Executive Director, Fatih Birol. Send in your questions on IB Plus TV Go. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's get straight to the Bloomberg. First word news, here's Leanne Gerrans. Hi, Leanne.
Hi, Francine.
Here in the UK, MPs have voted in favour of a package of measures to toughen government powers and speed up sanctions against Russian tycoons. The economic crime bill looks set to become law within days after it was rushed through the House of Commons. The legislation sets up a register identifying the ultimate foreign owners of UK real estate, preventing them from hiding behind shell companies. Now, a new study warns even a mild case of COVID-19 can damage the brain and affect thinking. Researchers from Oxford University found COVID-linked brain damage months after the infection, including in the region linked to smell. The scientists also found brain shrinkage equals to as much as a decade of normal aging. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Up next, it's The Price of Power, where we analyze and discuss the ongoing energy crisis with the top lineup of guests, NG's Chief Executive Catherine McGregor and the IA's Executive Director Fatih Birol. You can send in your questions on IB plus TV Go. The two big pieces of news: EU considering massive joint bond sales to fund energy and defense. Also, the London Metal Exchange halting nickel trading after an unprecedented 250% hike. We'll talk about both those stories. We'll look at the markets, stocks rallying on some of the EU news. This is Bloomberg.
Energy prices and a short supply of key chemicals that produce synthetic fertilisers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertiliser helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down. The manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
From New York City.
We're in London, in Sydney,
in San Francisco.
9 a.m. in Beijing and Shanghai. Good morning, everyone.
Have a great evening. To recap the headlines.
You do not want to miss this story. How are you thinking about those dynamics?
This is a market that, over the past few weeks, has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Good morning, everyone, and welcome to Bloomberg Price of Power Special, looking at the global energy crisis. I'm Francine Lacqua here in London. Now, Russia threatens to cut gas supplies to Europe via Nord Stream 1. The EU is drawing up plans to limit its reliance on Russian energy. U.S. gasoline prices hit a record high. The spiraling cost of filling up a tank adds further pressure on American households. Stay with Bloomberg Price of Power. Today, we speak exclusively to the chief executive of the French utility Engie, Catherine McGregor, and the IEA executive director, Fatih Birol. Two interviews you don't want to miss. You can send in your questions on IB Plus TV Go. Now, this is the picture for the markets. There's been a lot of volatility going on over the last hour or so. If you look at European stocks, now they're really buoyed by the fact that there's a proposal on the table. It's a Bloomberg scoop that the EU will look at possibly having a big joint bond issuance to actually fund energy and defense. This is something that we haven't really seen before, certainly not for this type of event in energy and defense. It brings us back to maybe what we saw during the COVID crisis. The 10-year German bond yield, watch out for that, as they could move the natural gas futures gaining some 3.8%. We really delve into how energy can supplant, or how Europe can supplant, some of the dependence on Russia. The timeline for that, of course, is crucial. If it takes too long, then it could be pointless. And then nickel, this is an amazing story. It gained some 250% over the last couple of days, currently at 80,000. The LME had to suspend this, and this is also because they're waiting on a margin call. There's a Chinese bank embroiled, but this is actually behalf of a client. Now, Russia threatening to cut off its natural gas supplies to Europe via Nord Stream 1. The move, which would be retaliation for sanctions, could worsen energy market turmoil and drive consumer prices higher. Now, on top of that, the U.S. and its European allies are discussing a possible ban on Russian oil exports. Well, what was unthinkable 10 days ago is now not impossible. Oil prices jumping on talks of possible sanctions, with the world bracing for an inflationary shock. Well, my next guest is the chief executive of French utility Engie. She's warned that any decision to stop Russian energy imports would impact the energy supplies of France and Europe next winter. Russian gas reported to represent about 20% of Engie sales worldwide. We are delighted to be joined by Catherine McGregor, the chief executive officer of Engie. Welcome to Bloomberg and to our special Price of Power special. Catherine, give us a sense actually of what you're planning to do with Russian oil and gas, and whether Europe can, if they turn off the taps, what does it mean for Europe?
Yeah, sure. And good morning, everybody. First of all, of course, maybe worthwhile to remind that we are strongly condemning the invasion of Ukraine, and my heartfelt support for the population that is affected. So your question is related to the dependency of Europe on their gas supply. So, Europe is depending on Russia for gas supply up to 40%. So it's a significant dependency. And of course, this dependency varies from one country to another. Some countries, actually, this dependency is very, very high. And it gives you a little bit the size of the challenge should indeed, the supply of Russia completely dry out in the coming weeks or coming months. So it is a challenge for Europe. Obviously, I don't talk too much about oil. Engie is a gas purchaser and supplier. We are not producing gas, but I'll focus on gas for the sake of the interview.
So Engie owns 9% of Nord Stream 1 pipeline. We're hearing from the Russian side that they could cut it off. How comfortable are you in still doing business with Russia right now?
Look, I mean, on a personal front, of course, you can only be horrified with what's happening. And at the same time, as a responsible energy player, Engie has to continue to provide gas to its many, many customers, both residential and industrial, who depend on this gas from economic, absolute sound reasons. But of course, should EU decides sanctions on the gas, of course, Engie would comply in the minute.
Yeah, but so unilaterally, Engie would not join other companies in cutting all ties with Russia, as things stand.
So Engie today is not present in Ukraine, doesn't have any operation in Russia. So the reality for Engie is a little bit different. We do buy gas from Russia, and I think you've reminded you've just reminded us that it was about 20% of our total gas sales and gas consumption. And at this stage, we continue to buy the gas from Russia. We are obviously thinking about continue to be there for our customers, and that is really what is driving us. And of course, again, sanctions, should sanctions be decided at the European level, of course we would comply.
Of course. What would be the consequences for gas prices if Russia were to turn off the gas supplies?
Yeah, I mean, we would probably then enter a new world. Prices which are already quite high would probably go to newest high, and markets will need to be regulated in some shape or form, both from a physical supply, but also, of course, from the price point of view. So you could expect a very high volatility.
High volatility. I mean, how extreme would be the price shock? And what does it mean for actually subsidies and price caps in France?
So look, the price in Europe is driven by a European market. So it's a it's a European-driven market. So the gas price is really driven by European market. And what we are anticipating, of course, is regulation to kick in ahead of such a shock, and therefore measures to be taken in anticipation. I think it's really important indeed that such a shock would be anticipated, and our expectation would be that as much as we can anticipate and moderate the volatility that would be expected in such a market, we would welcome that.
You're also one of the European companies that provided a loan to Nord Stream 2, which has now been suspended. What's the financial consequence of that for ENGIE?
Yeah, so as a lender, we are exposed to the credit risk on this loan, and we have, mentioned the exposure, which is up to just below 1 billion euros. And of course, the credit risk is something that potentially could materialize if indeed, the company was to be bankrupted.
Of course, we need to look at the longer-term transition. Is it at all possible to, for the European Union to actually meet their target of reducing Russia gas dependency by 80% this year?
So, of course, longer term, the case for the energy transition is stronger than ever. Energy transition is obviously a diversification of source of energy. It is also a much higher reliance on renewable energy. Renewable energy is produced domestically. It's almost infinite once installed. So the case for renewable energy is stronger than ever, and that frankly calls for what ENGIE is about, which is acceleration in renewable energy. I would also like to call your attention to the biomethane and biogas potential, because this is gas, and gas has a major role to play still in the energy transition to help stabilize and compensate the intermittency of the renewable. And for that reason, biomethane and biogas has a potential that we feel can be accelerated even in the short term. In France alone, for example, biomethane was about 6 terawatt-hours last year, and we think that can be doubled in a fairly short term, Francine. So yes, energy transition, in a way, potentially can be a strong winner from, this crisis because of the case of the renewable energies, and that includes electricity and gas.
But despite your efforts, your tremendous efforts and the tremendous efforts of ENGIE, your position as leader in renewables in France, France still relies, I think, about 70% for its energy needs, for example, on nuclear. So what's the right mix to accelerate that transition?
Yeah, I think France has made the choice of a balanced mix for the future. And to be honest, balance, in my mind, is the true source and secret for resiliency. The obsession that everyone needs to have is to find the right balance between low carbon, affordability, robustness, and of course, social acceptability, which, as you know, can be a challenge sometimes in our countries. And to have a diversified energy mix is, for me, clearly the secret of that resiliency, affordability, and of course availability of the energy supply. It is really, really the key. So not one technology can be the only winner. To have a diversified source of technology is important. That can include nuclear, as France has made the choice, but nuclear won't be enough. You need to have a lot more solar, you need to have wind, and of course, biogas. And this is why, it is so central to energy strategy.
Catherine, we're also following this incredible nickel story with the LME now suspending it because of a margin call that needs to be paid back, which for the moment we haven't seen yet. This could impact a lot of the renewables. How much do you use nickel in terms of your renewable projects, and what could be the longer term impact of this?
No, I mean, I didn't quite get completely, Francine, your question, but what I can assure you is that, ENGIE obviously has a very strong balance sheet. We are in good shape, and we have no intention to stop continuing to invest and accelerate our development in renewables.
What does this mean?
And now
for
I get your
ENGIE?
question.
Yeah, it was on nickel, but I mean, it's moving so fast, and actually nickel, extending the surge, and of course the LME now suspending that. So I know things are moving extremely fast. Like, is there a danger? The broader concern, Catherine, is that actually that you don't have access to some of these materials or some of these metals that are so needed in the energy transition because of the war in Ukraine.
Yeah, look, sorry, I get now your question, Francine. So diversification of supply is going to be very, very important. And you're right to say that we're still working out through all the different components of our supply chains across different technologies. But again, from a principle standpoint, it does speak to having as much a diversification of technology, of sources of supply, both in terms of nature of supply, but also where they come from. And that's really where we're going to be driving more robustness and resiliency. And that's just going to be, I think, when time goes by and we will look at this crisis, it's going to be one of the key lessons.
Catherine, thank you so much for joining us today. The ENGIE Chief Executive Officer there, Catherine McGregor, joining us with a nice roundup of exactly some of the challenges and opportunities going forward. Now let's get straight to the Bloomberg First Word News on price of power. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. The European Union is set to unveil a plan to jointly issue bonds on a massive scale to finance energy and defense spending as it copes with the fallout from Russia's invasion of Ukraine. Bloomberg understands the proposal may be presented after an emergency EU summit in France at the end of this week. Upgrades to the bloc's energy infrastructure is likely to be a key part of that very plan. Now, Russia has threatened to cut natural gas supplies to Europe via the Nord Stream 1 pipeline. Energy Minister Alexander Novak warns the Kremlin has the right to take actions that mirror the penalties imposed on the Russian economy. Meanwhile, sources say the EU is mapping out proposals to cut Russian gas imports by almost 80% this year. The plans to be presented later today will include tapping new gas supplies and increasing energy efficiency, which aims to deliver independence from Russia well before 2030. And the cost of rescuing failed UK energy supplier Bulb could jump to as much as £3 billion after wholesale natural gas prices did reach a fresh record. Bloomberg understands the administrator running the company is using taxpayer money and needs more funds to purchase energy for customers. The cost was initially pegged at £1.7 billion. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Now, up next, we'll continue the conversation on the price of power with the executive director of the IEA, Fatih Birol. Pretty crazy swings when it comes to energy and metals. You can send in your questions on IB Plus TV Go. This is Bloomberg.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Economics, finance, politics. This is Bloomberg Price of Power, looking at the global energy crisis. I'm Francine Lacqua here in London. Now, the market's really on the move. A lot of support for European stocks because of this possible joint issuance of debt, a pretty hefty issuance. It's a Bloomberg scoop. It has not been approved, but it would be the EU considering this massive joint debt bond sale to actually fund energy and defense. You can see nickel, our biggest focus, when the LME halts nickel trading after unprecedented 250% spike.
Hello traders, happy Women's Day. Today, 8th of March, right back to business. I'm going to place an order to buy euro, and the price I'm looking to buy 108.77.78. Let's place this order. Okay, if you're looking to trade today, market was very volatile all these days, so it's kind of difficult to predict, difficult to see where the price will go up or down. So right now, as you can see, it can go any minute down, any minute up with Forex, especially Euro, Bitcoin or British Pound. But right now we spotted the profitable trade, 108.78. This is the price we're looking to place an order. So please follow my trade if you want to trade, and stay with me, and I'll speak to you later after we will get filled euro order. Also, I'm going to place order to buy British pound. The price I'm looking to buy British pound, 131.05. Let's see if I'll be able to buy 131.05. Okay. Okay, order placed. And let's see what's going to happen with British pound. I'll speak to you later, guys.
Energy Aspects founder and director of research, Amrita Sen, speaking to Bloomberg a little bit earlier. Now, for a map on the terminal, these ships have either a Russian flag or the country of operation of the ship owner, manager, technical manager, operator, or beneficial group is in Russia. I don't know whether we have it, but it's a good way of actually looking at some of the vessel search. Some of them will not actually be sanctioned, but traders find it more and more difficult to go out there and buy Russian oil. Now, a strategic release of crude announced by the IEA will see 60 million barrels of oil from member countries stockpiles deployed to help compensate for missing Russian output. The move has not done much to quell oil markets, though. The price of crude has continued to rise, with some traders betting that it'll even break $200 by the end of the month. Well, joining us now to discuss all of this is Fatih Birol, Executive Director of the IEA. Fatih, thank you for joining us. It must be an absolute nightmare trying to predict the price of oil. How high can it go?
It can go higher than what we see today. It will depend on a few factors, but mainly the behavior of Russia, whether it will continue the invasion, and we don't see if we see or not a ceasefire over there, but also what kind of measures the producing countries, other oil-producing countries will take, and what kind of measures the consuming countries are ready to take. So these are three main factors: Russia's behavior, political behavior; second, producing countries, oil-producing countries' behavior, decisions; and third, consuming countries' decisions they have taken and they may be taking in the next days to come as well.
Fatih, the IEA has said its release of 16 million barrels of oil was a first step. Given the market turmoil and the market disruption has increasingly intensified over the last couple of days, would you be looking at releasing more?
Thank you. I have mentioned that this was an initial release of stocks. We are following monitoring the markets closely, consulting with our member countries, but also with other producing countries around the world. And when and if necessary, we will definitely recommend our member countries to release more stocks. I should mention to you that the amount of stocks we release as of last week was only 4% of our stock reserves. There is a lot of oil there, and it will be at the disposal of the markets in order to help to stabilize the markets. But I should tell you that I am rather disappointed with the several producing countries who did not take the necessary measures.
Hello guys again. As you can see, order to buy British pound, we need to cancel it because it moved to far away. Let's wait for another time. Okay, the order to buy euro still on. So let's wait, let's see what euro, if we'll be able to buy euro. Okay guys, stay safe.
With all the countries around the world, we are reminding them that if the markets, the turmoil continues, it is not in the benefit of anybody, as I see now, but it is of course up to them to decide. I think the previous colleague you talked with saying that there was not enough spare production capacity. This is not right. There is significant amount of spare production capacity, and one may take some of them, bring it to the markets. And I would also tell you that we are very soon, we are going to come up with some suggestions how to reduce the oil demand in a hurry. What we can do there on the demand side, some regulatory, voluntary measures that the governments can take, the consuming countries, to reduce the demand, in addition to the possible impact of the high oil prices on the demand growth.
Fatih, can I go back to this possible second release, actually, of stockpiles, emergency stockpiles? You said this was a minimal amount compared to what you have. If Russia were to turn off the taps, would it also be a political decision to actually just put a lot of barrels out there on the market as a significance of what we could do?
Yeah. So as I said, this is only what we have released. 60 million barrels is only 4% of our total reserves. And if we see the need, we can release substantial amount of oil to the markets. They are all on the table. We are monitoring it very closely.
Is it time for OPEC Plus to expel Russia?
I think it's up to them what they are doing, with whom they are working together. It is their decision, but what are the consequences of those decisions will be understood in the next months to come, if there are any.
Are you concerned with actual shortages in Europe's diesel market, Fatih?
I see there are already difficulties in the markets. There's a significant gap. And we are working with many governments around the world how we can narrow that gap. Increase of production from several producing countries, reduction of demand, and maybe additional stock release from the International Energy Agency.
So who has said that first of all, are you receiving any actual reports on these shortages on diesel? And who have you had conversations with that are ready to step in?
I think we talk with all the countries who are really responsible to address this, feeling responsible with this situation in the markets, who want to help, who want to solve the problem on the producing side and also on the consumers side. And we are following the markets. momentarily, to be honest with you. Yeah. And we look at how we can solve this diesel problem, but it's not the only problem. We have other challenges as well in different markets, from India to Latin America. There are several problems, and it will amplify those challenges if we are not able to bring new oil to the markets.
Fatih, thank you so much. As always, Fatih Birol, their executive director of the IEA. Oil pushing higher, of course, as the U.S. is also moving a step closer to imposing a ban on Russian crude imports. Well, that's it for the Bloomberg Price of Power. Bloomberg Surveillance Early Edition continues in the next hour with Matt Miller, Kaylee Lyons in New York, Anna Edwards in London. This is Bloomberg.
That it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccine specifically, neutralize the virus, but not as efficiently, because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines, and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. Because as we know, many parts of the world use different types of vaccines. And that would be a great data to look at. It will be also great to look at, because majority of the studies done uses a small sample number, and most of the time when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus, Omicron variant, still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Framework we've used is that we view this as a growth steer.
Asset allocators are really struggling now to shift their portfolio. The good news is that I think markets have not been complacent at all on this.
We were in a commodity squeeze already before all this happened, which is why it's so dramatic.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kaylee Lyons.
It's 10 a.m. in London, 5 a.m. in New York, and 6 p.m. in Hong Kong on this Tuesday, March the 8th. Our top stories today. An unprecedented day at the London Metal Exchange. Trading in nickel has been halted after a stunning price hike led to a short squeeze. A warning from Russia. Gas prices surge as Moscow threatens to cut supplies to Europe. Meanwhile, stocks rally on news that the EU is considering joint bond sales to finance energy and defense spending. And congressional crackdown. U.S. lawmakers agree on the outline of a deal to bar imports of Russian oil. A vote in the House could take place on Wednesday. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kaylee Lines in New York. And Kaylee, we were moving to the downside on risk assets here in Europe until we got news of the possibility of joint bond offerings here in Europe. And that changed the environment. But the Asian session still weighed down by a focus on higher commodity prices.
Yeah, that's absolutely right, Anna. Those optimism that prevailed or is starting to prevail didn't hit quite in time for the Asian session overnight. It was broadly a down day when it comes to those major benchmarks. The MSCI Asia Pacific Index was down by about 1.5% or so. You had China down 2%, Hong Kong also down. It was really technology that was the big drag once again. The Hang Seng Tech Index down for a fifth day in a row, lower by 3.2% overnight. And of course, that's as of course inflation really is at the forefront of concern, due in part to higher commodity prices. And of course, nickel was front and center in that regard today, of unprecedented 250% price spike. That led the London Metal Exchange, as Anna said, to halt trading of that metal. But before that, the LME also lent additional time to China Construction Bank Corp to pay hundreds of millions of dollars in margin calls that were due yesterday. So that unit of that firm in China is not in default at the moment because it was given that additional time. Still, though, it was down about 1.5% overnight. Finally, I just wanted to point out that as we're seeing inflation fears really front and center, even though it is leading to some easing of selling pressure when it comes to risk assets, you are still seeing that selling pressure reflected in the global bond market. That was true too in New Zealand, especially at the short end. That two-year yield moving up 12.5 basis points to 245 or so, Matt, and that is the highest going all the way back to January of 2016.
All right, we see yields rising here as well. As futures are up too. S&P futures not really getting a lift from the EU bond news. We were already up after such an abysmal session yesterday. We closed down almost 3% in the cash trade. The U.S. 10-year yield up 6.5 basis points right now, 183.70, as investors feel comfortable enough to sell the perceived safety of government debt. NYMEX crude continues to rise, 122.28 a barrel. So Texas Intermediate getting closer and closer to 125. And you see Bitcoin right now up about 3%. We've seen this really...
Okay, guys, as you can see, position opened on Euro. 108.78. Well done, all of you who decided to stay with me, follow this trade, copy it, stay with me. I'll let you know when we're going to play stop for our position, and we will move on. Okay, guys, well done. I'll speak to you later.
Growth, and so stocks continued to sell off. But then we got that news that we mentioned in the headlines about the possibility of Europe raising debt to fund investments in infrastructure, in energy, in defense, and specifically energy and defense. And that turned the sentiment around for European stocks. And of course, we see the CAC 40 and the Xetra benefiting from that, and the IBEX and the FTSE MIB benefiting even more. And talking about benefit, when it comes to the bond markets, that's where we started to see divergence across Europe. We see spreads tightening for the Italian bonds over German bonds. That tightening taking place because, of course, burden sharing, fiscal responsibility being shared around Europe. If that is what we're going to be talking about a little bit more, that brings in those spreads and improves the prospects for Italian debt. This is the gas price benchmark. We've been above $300 euros a megawatt hour. That was in yesterday's session, but today making a move to the upside just by a fraction. Just want to keep an eye on where we are on that one, given the warnings we got from Russia overnight, that messaging from Alexander Novak, the energy minister in Russia, that there was the possibility of cutting supplies to Europe. Of course, Europe shuffling things around very quickly and trying to respond and trying to insulate itself where it can. In terms of the nickel news, and Kaylee was pointing this out in the context of the Chinese connections there, nickel we saw on an incredible tear, up by 90% in yesterday's session to $55,000 in the session yesterday. And then we saw it on the move overnight further to the upside before the LME decided to stop trading at around the $80,000 mark. So that continues to be a focus. And this is a French business that trades in nickel, that mines nickel. It is up by 3.4% on the back of those higher prices. And this is an interesting one. Uniper, this is a big utility in Germany, and it's one of Europe's biggest buyers of Russian gas. And they have said they will not sign any further long-term contracts with Russia. They will, though, use their existing contracts to continue to take that delivery through the pipeline, but they won't sign new ones. That stock is up by more than 8%, Kaylee.
Kind of feeds back into this idea of self-sanctioning. And of course, we're seeing a laundry list of companies that keeps getting longer, pulling out of the Russian market. So we will continue to watch that in the day ahead. As for what else is ahead today, Apple will be holding its first product unveiling of 2022. A new low-cost iPhone and updated Macs with Apple-made chips could be introduced. It's also International Women's Day. Throughout the day, we'll be speaking to a variety of female leaders in the business world. On the economic front, we'll get some U.S. data, including trade balance and wholesale inventories. And of course, geopolitics remains firmly front and center. Ukrainian President Vladimir Zelensky will address UK members of parliament later on, Matt.
All right, we'll be watching that very closely, but I want to get to the Bloomberg scoop on the joint debt. The European Union considering joint bond sales to help counter the fallout from Russia's invasion of Ukraine. And this would be really a monumental move, the likes of which we haven't seen since the beginning of the pandemic, something that was considered in previous crises but not used. We've got team coverage here from Brussels. Our European correspondent Maria Tadeo joins us. From D.C., we're joined by our Washington correspondent Joe Matthew, and from London, we're joined by Bloomberg's Danny Berger on the commodities fallout, that huge run-up in nickel really front and center. But first off, Maria, let's get to the new news here, the possibility of joint EU debt, and it could be massive.
Yeah, and you know, Matt, just to make it very simple, strip away the technicalities here, which are still being worked on, this would look very similar to the next generation EU. Now, that's more jargon coming out of Brussels, but I'm sure you remember that is the pandemic response that was put together. Essentially, it's the Commission and the European institutions, which are rated AAA. So this is a top quality that go to the market. They tap markets, and then, of course, they kind of just disperse funding according to different criteria to all of the European countries. But what is key here, of course, is that this is done jointly. Now, this time around, it would be a mechanism that would look very similar to that. So the European Commission would go to the markets, tap the markets, and so on. But the key here is that European officials want to make this quickly. You know, they want to send a political signal that there will be a plan to deal with the economic fallout of the Ukraine crisis. So we understand that the details are being worked on, but by Friday, so that is in 3 days' time, European leaders who will meet in Paris would want to give the political approval to this, and then you get the technicalities and the technical work that will have to be done on this, but they want to send a message as of this Friday.
Okay, so that fiscal consolidation project across Europe continuing there. We'll see what scale there is to it, as well as the political signal. What about the motivation for doing this, Maria? And part of that is to invest in diversifying energy supplies. And the reason to do that, very clear overnight with these warnings from Russia.
Yeah, well, here's the thing, Anna. Yesterday night on primetime news in Russia, Alexander Novak went on TV and said Russia has a right to counter sanctions from the West. The West is being very unfriendly with us, and that means that perhaps on the Nord Stream pipeline 1, remember the Nord Stream 2, that is politically dead, but the 1 continues to work and continues to operate. And he said we could cut supplies from that pipeline. It is our right to respond to the unfriendly actions of the West. Now, he also said and put a number of this. We could see oil hit $300 a barrel. Now, the European Union today and the officials that I've spoken with, they say once again, this is Russia making threats. It's shown that it's not a reliable partner for the EU, but it also shows is that Russia is finding itself in a difficult situation that is now moving on the attack. Having said that, yesterday, once again, we heard from the Germans, we cannot unplug from Russia from one day to another. They don't support a full embargo. So it's one thing what you say on paper and the language, but the reality is in many ways, we're still very connected to that Russian supply.
All right, Bloomberg's Maria Tadeo in Brussels with the European response. Thank you so much. Now let's talk about the U.S. response, because in Congress, key lawmakers have announced the outline of a bipartisan bill to bar imports of Russian oil into the U.S. The House could vote on the proposal as soon as Wednesday. OPEC Secretary General Mohammed Barkindo spoke yesterday on Russia's contribution to crude markets.
How do we survive this crisis? There is no capacity in the world at the moment that can replace 7 million barrels of exports.
Bloomberg Washington correspondent Joe Matthew joins us now from D.C. So, Joe, it might be hard to replace Russian oil, and yet Congress looks like it wants to move forward. Where does the administration come down on this?
Well, to be clear, President Biden could do this at any time, could ban Russian oil imports through executive order, and that is something that's being considered right now. Buy himself a little bit of flexibility. That is actually the way this could end if the president decides to do that. Having spent some time yesterday speaking with the leaders of France, Britain, Germany on this, they are clearly not on board. Remembering as well now, as Congress makes a move, they were unable to agree on sanctions in advance of the invasion. This new framework agreement that you mentioned, announced by leaders of the House and Senate Ways and Means committees, would do a couple of things. It would ban Russian crude oil imports. It would also give the president more power to tariff other imports from Russia as well as Belarus, and it would seek to expel Russia from the World Trade Organization, the WTO. President Biden, as I mentioned, though, knows he will have to go it alone here, and there are some concerns inside the administration that might give the appearance of a crack in the alliance. It's unclear exactly how this is going to end here, but there are also concerns domestically by refiners who are concerned about short-term interruptions and are asking for a transition period so they can replace that Russian crude.
Joe, is all of this going to help the administration, the government, get a new round of funding through?
I don't know if it's going to help. I don't know if there needs to be help, Matt. There's a bipartisan, bicameral effort right now. Everyone seems to be on board when it comes to relief funding for Ukraine. It's just a question of what the number is going to be. The initial request from the administration was about $6.4 billion. That crept up to about $10 billion in the last couple of days, and now there are reports that it could be as high as $12 billion. But, Matt, that would be part of the omnibus budget to keep the government operating as we head for, well, I won't say that we're heading for a shutdown because no one's threatening that on Friday. They might have to find a short-term solution to avoid a shutdown, though. There's a lot in that bill, including a $22 billion request for COVID response funding. That number is not as popular among Republicans.
Joe, thank you very much. Bloomberg's Joe Matthew. You can listen to Joe every weekday, of course, on his radio program Sound On. That's at 5 p.m. Eastern Time on Bloomberg Radio. Now, back to commodities. We were mentioning the wild ride in nickel earlier. The London Metal Exchange halted trading in its nickel market after an unprecedented price spike. Let's get the details then from Bloomberg's Danny Berger. Danny.
Anna, the price chart kind of says it all. And for our radio listening audience, think GameStop January 2021. It is a parabolic move that we more recently have associated with meme stocks. This is the look of a short squeeze. And bear with me while I explain how something like this could have happened. Last week, we saw a 20% rise in the price of nickel with supply concerns over Russia. If you're someone who is short nickel at this moment, your position all of a sudden is getting more and more unprofitable. A broker will say, okay, you need to put up more collateral to make sure that you can pay off that unprofitable position. But if you can't pay it off, you close out your position. And closing out a position causes the price to rise, causes more people to close out their position, the price to rise, snowballs and snowballs, and that's how we get a move like this, where it doubles in the space of just 5 hours. Now, the LME has a stake here to make sure things are calmer. Having people default could have knock-on effects for them themselves, and that's exactly what we've seen. They suspended trading of nickel today, saying that margin calls would be calculated on yesterday's much lower price. And also, people familiar telling Bloomberg they gave a unit of the Chinese Construction Bank more time to meet a margin call, something really unprecedented.
Yeah, so a lot of unprecedented moves in commodities. And natural gas is one that we've been seeing on a tear for quite a while. What do the moves look like after Russia's threat yesterday?
So we get this initial price spike of 30%, which I should say kind of feels like small potatoes compared to what nickel did, but it rallies 30% already at historic levels. It has calmed down somewhat since, with a more calm market after this bond announcement from the EU. Now, it's measured in megawatts per hour, so I think it's a little bit more simple to understand these moves if you measure it via gas. Measured as oil, it reached the equivalent yesterday of over $600 a barrel. Today, it's trading around $400 a barrel. The argument can be made, look, Russia is small when it comes to its contribution of the whole economy, but Goldman Sachs numbers show how important Russian oil is and the ramifications, even though Europe says it wants to wean itself off for now. Europe gas relies on 40% of it from Russia.
heavily dependent. Thank you so much to Bloomberg's Danny Berger for that great breakdown. Now, as we talk about the moves we're seeing in natural gas, that is reflected in pre-market trading here in the U.S. when it comes to a movement of one individual equity, and that is Cheniere. Its ticker is literally LNG. It is a big LNG player here in the States. It is moving higher as we're seeing natural gas prices moving up by about 2% in early hours. Another stock moving to the upside, and this is an interesting one, Stellantis, of course, the automaker. It's down 20% in just the last 3 sessions, down about 27% year to date, but it's rebounding today, up about 5%. Of course, what's been dragging on the stock is the fear that the war in Ukraine, the resulting sanctions, could all make the supply chain issues automakers are grappling with even worse. But a little relief is coming into that stock in particular today. To the downside, though, Mandiant. This is a cybersecurity company that Microsoft was in talks to buy. It has now walked away from those talks. It was reported yesterday that Google instead is looking at a potential acquisition. The stock rose 16% on that in the Monday session, but giving back some of those gains today, down about 3% in early hours, Anna.
I'm sure, given the geopolitics, there are still a few people focused on cyber risks. Kaylee, coming up on the program, the global economy is at a mounting risk of stagflation and potentially more recessions. We will discuss that with Sylvia Delangelo, senior economist at Federated Hermes. She joins us shortly. And more on the war in Ukraine with Georgina Wright, senior fellow at the Institut Montaigne. This is Bloomberg.
Pepsi's Number Fever campaign in the Philippines has probably gone down in history as one of the biggest marketing disasters in history, mainly because of a human error that led Pepsi to print more winning caps than they planned. The resulting chaos caused riots, civil unrest, and even deaths. Reporting this story took over a year, and it resulted in me flying to Manila in the Philippines to meet unlucky winners and to find out exactly what happened back then in the 1990s. My name is Jeff Maish. I'm a journalist based in Los Angeles. I wrote the story for Bloomberg Business Week about Pepsi's Number Fever campaign. The Philippines is a really interesting country. It's made up of thousands of islands, and it's also a country that's very heavily influenced by America. American culture is everywhere you look in the Philippines. They're obsessed with Frank Sinatra music, for example. They love all things America, and that extends to their love for soft drinks, Pepsi-Cola, Coca-Cola. In the 1990s, it was everywhere. Pepsi and Coca-Cola were embroiled in what is now known as the Cola Wars. It was a fierce battle for market dominance. Number Fever was already a really popular promotion. It had been rolled out in America to great success. And so Pepsi decided to roll it out internationally, particularly in Asia. They thought it was the answer to their problems. They thought it could finally help them beat their biggest competitor.
Look for the winning number in Sari stores every day, also on TV, radio, newspapers. You could be a millionaire.
$1 million pesos, or $68,000, doesn't sound like a lot now, but in 1992, that was a phenomenal amount of money. You've got to remember that in the Philippines at the time, the average monthly income was about $100, so $1 million pesos was wealth beyond anyone's wildest imaginations. Number Fever caught fire in the Philippines. Kids were saving up their pocket money to buy a bottle of Pepsi. Parents were squirreling away all of the bottle caps in bags. You would walk down the street and people were going through trash trying to find discarded bottle caps. It was a national phenomenon. Pepsi boasted that half the population of the Philippines was playing it. Number Fever boosted Pepsi's sales every month from $10 million to $14 million. It had a huge impact on Pepsi's bottom line. Number Fever quickly became number hysteria. Maids were being jailed for stealing their employers' winning bottle caps. There was even some murders over winning bottle caps. People were fighting in the streets over these caps. There were signs that there were going to be problems with number fever very early. Pepsi had rolled out the competition in Chile, and a garbled fax had caused some kind of problem with the winning number. They'd announced the wrong one in Chile, causing riots. There were signs that there could be big problems ahead if they didn't keep their eye on the ball. So in 1992, Pepsi decided to extend the campaign in the Philippines, and they announced that the competition would go on for a few more weeks. One night, on the television news, they announced the latest winning number, 349. The problem was, 349 had already been allocated as a non-winning number in earlier campaigns. So there were literally hundreds of thousands of bottle caps with 349 just floating around the Philippines. Hundreds of thousands of people all across the Philippines, thousands of islands, were finding winning bottle caps. 349, 349. Some people had 10 lucky 349 bottle caps. People were dancing in the streets, celebrating. They thought their problems were over. They were millionaires. It's still not certain exactly how many winners there were of lucky 349 bottle caps, but we know that Pepsi printed over 600,000 of them. Pepsi realized very early that there was a problem. Hundreds of people started arriving at their bottling plants with their lucky bottle caps. They realized something was seriously wrong. Pepsi tried to solve the problem by offering a small token donation to anyone that brought a lucky bottle cap to their bottling plant. But it wasn't enough. People didn't want just a handful of pesos. People wanted their million-peso prize. Within a year, violent protests and riots outside Pepsi factories would leave dozens injured and 5 people dead. At one Pepsi factory in the Philippines, a grenade was thrown through the window. It killed 3 Pepsi employees. Anacita Rosario was a school teacher living near Manila in the Philippines. She was one of the tragic victims of this whole thing. She was walking to a nearby store to buy some rice one day when a Molotov cocktail was thrown at a Pepsi truck in a violent protest. It bounced under the truck and exploded. It killed her and an innocent bystander who was just a child and injured many others. When I was in the Philippines, I tracked down Anacita's daughter, Cindy, and her husband, Raul. It was clear to me that they were still very upset by the whole thing. You know, a family had been ripped apart by this competition. And Raul told me that he'd never remarried. He'd told me that he'd gone to meet Pepsi executives after his wife was killed. And he was angry. He said to them, you know, this wouldn't have happened if it wasn't for you, if it wasn't for number fever. The biggest revelation from my reporting was rumors that Pepsi was somehow involved in bombing their own trucks. I found a newspaper report with a headline that said, "Pepsi goons bomb their own trucks." And when I visited the MBI, the police department in the Philippines, they presented me with documents and interviews with people who claimed that Pepsi had paid them to cause riots and to cause trouble outside their plants in order to destabilize the situation and to frame the owners of the coalitions that were fighting them to try and curry favor. I just thought that was so shocking. And of course, Pepsi denied it, but how bizarre that a company would be accused of bombing their own trucks. The contest had sparked so much anger in the Philippines because it landed at just this really weird time in the Philippines' history. It was during a crazy election that was racked with allegations of fraud. The Philippines was in a kind of love-hate relationship with America. They loved, obviously, the American aid and finances that was pouring into the country, but at the same time, they yearned for independence. They wanted to be their own country. Vicente Del Fierro was a local preacher living in Manila, and he hated the number fever campaign. Del Fierro thought Pepsi's number fever campaign was just one of the many ways that America was asserting its dominance over a third world country. He hated seeing his fellow countrymen get ripped off, in his eyes, by this huge multinational American company. He wanted justice. Del Fierro rounded up over 800 winners of 349 bottle caps, and he got them all together to sue Pepsi for over $400 million to be divided between those holders of lucky bottle caps. Del Fierro took money from some of the people who could afford it. They paid him 500 pesos to help with legal fees, but for people who couldn't afford the money, he would just represent them pro bono.
The alliance is to build up pressure on Pepsi. And so you see people marching in the streets. So we have mounted our own campaign, even in the U.S.
He flew to America and he hired two consumer lawyers here in America to take on Pepsi. He had a meeting at Pepsi's headquarters to try and resolve the problem, but he said he wanted to take it all the way to the highest courts in America. When those cases were heard in America, those courts decided that this was a problem that should be heard in the Philippines, not in America. Back in the Philippines, Del Fierro continued his case in the Filipino courts. At one stage, there were arrest warrants handed out for 9 Pepsi-Cola executives, which he saw as a big victory. We don't know if those arrest warrants were ever upheld, but it made newspaper headlines across the country. Pepsi did not take kindly to Del Fierro's campaign. They tried everything to shut him down. They sued him for libel.
My father had to attend 3 times a month for a branch 145 and another hearing for the branch 113, also 3 times a month. Also, there was a time my father was hospital due to heart failure. Still, he had to attend the 2 branch hearing. Otherwise, for not attending, the judge will issue a warrant of arrest to my father. My father passed away January 13, 2010. After staying for almost 1 year in the hospital, he died of complication due to heart failure. After the death of my father, I was inspired to do the website. PepsiCo will be remembered for what they did to the consumer in the Philippines and to my father.
When I reached out to Pepsi for comment for this story, they claimed that they didn't have access to anyone who was working at Pepsi that was around in those days. They also said that during COVID-19, they didn't have access to their documents about this, but you know, they were very careful to say that they were sorry for everything that happened, and we do know that Pepsi did try everything to try and make this right. The Pepsi number fever disaster cost the company millions. We know that they paid up to $10 million in those goodwill payments, but the financial effect could be much greater. After the disaster, we know that Pepsi sales dipped. They were overtaken by Coca-Cola again. Pepsi's number fever disaster changed the legacy of that soft drink in the Philippines forever. Some people of a certain age won't touch it. For many people, Pepsi is a taboo word. A lot of the people that I spoke to were still quite traumatized by their experience, by that experience of winning $1 million pesos, losing it, and then returning to their normal life in poverty in Manila.
When the news of the bombing came out, it was a massive story in Germany.
We are following some breaking news coming to us out of Dortmund in Germany.
It was covered by all the media outlets.
3 roadside explosions triggered at the same time last night as a coach left its hotel in the south of Dortmund.
Public figures commented on it.
We should not let them affect our life, whoever it was.
The media echo went far beyond Dortmund.
I think it was front page news in every single big paper around Europe. Everyone thought of like a terrorist attack, and people were scared that throughout the city in Dortmund there was more attacks to be happening.
Unbeknownst to investigators, just after the bomb went off and the players of the team were shell-shocked, the person who had masterminded the attack was actually sitting in the hotel eating steak and sweet potatoes. My name is Thomas Rogers. I'm the journalist who wrote the article, The Get-Rich-Quick Scheme That Nearly Killed a German Soccer Team. Dortmund is a mid-sized city in the western part of Germany in a state called North Rhine-Westphalia. And it's a former industrial city that's kind of fallen on hard times in the last few decades. It was severely bombed in the war, so the center of the city is quite stark. Some of the few high points include its soccer team.
My name is Ike Henning. I'm a reporter with Bloomberg News, and I'm a great fan of Borussia Dortmund. Dortmund fans are super loyal. On all match days, the entire city is in black and yellow. It's like a religion.
I think more than most German cities, soccer does play a very large role in the identity of Dortmund. In October of 2000, the BVB became the first team in the Bundesliga to actually go public. Salaries for soccer players in the Bundesliga have gone up very dramatically. With such high prices, they thought that by going public, they would be able to compete better with big teams like Bayern Munich.
Unfortunately, that didn't go too well. Dortmund bought too many expensive players, high wages, and the club almost went bust in 2005.
The price of their shares, it has sometimes gone up, but mostly gone down since they made that decision. So on April 11th, 2017, the team was staying in a hotel on the outskirts of Dortmund.
Match days are always special in Dortmund. Everyone is looking forward to it. The team always meets in the same hotel ahead of matches.
They stayed in this hotel in order to have a kind of neutral space before games so that they could concentrate, be sort of isolated from distractions, things like that.
Everyone was pretty optimistic. They had a chance to go really far, maybe into the finals. I was in the office and getting ready for match day. I was going to meet with a friend, a fellow Dortmund supporter, in a pub. As always, the fans are very excited about matches.
On that day, they were heading to play in the quarterfinal against AS Monaco at Signal Iduna Stadium, which is in the center of Dortmund. Shortly before 7 p.m., the players of the team boarded their official team bus.
When the bus took off the parking lot of the hotel and turned on the street, there were three detonations, 3 bombs that exploded and hit the bus of Dortmund.
3 explosions occurred close to the Borussia Dortmund team bus. The B team bus had just left the hotel. The explosions destroyed 2 windows in the rear part of the bus.
People screamed, people jumped to the ground.
The fellow Dortmund fan I was supposed to watch the match with, he called me and said, turn on the TV, there was an attack of the Dortmund bus. And I thought he was like, that was impossible.
Some of the players screamed at the driver to keep driving as fast as possible because they were worried that people might storm the bus.
German investigators say the explosive devices used in the attack on the Borussia Dortmund bus contained metal pins, and that one had pierced a seat headrest.
Unbeknownst to the team members, the actual mastermind behind the attack was, as they were disembarking the bus, was actually eating steak and sweet potatoes at the hotel they had just left.
Authorities are attempting to verify a letter left at the scene claiming jihadists were behind the attack.
Because there had been a series of attacks by Islamic terrorists in Germany and Europe, there was widespread suspicion in the media that this was another Islamic terror attack. 3 letters were found at the site of the bombing that took credit for the attack on behalf of Islamic State. There were, however, reasons to doubt this particular narrative.
Would actually be a surprise if ISIS were actually part of this attack. Possibly could be employed by other groups like the far right wing to try and shift the blame.
The letters had some strange qualities. They were written in a strange German that used big, sophisticated words, but had basic grammar mistakes, as if someone was native German speaker but pretending to be a foreign person.
Federal investigators have detained 1 man suspected of links to Islamist terrorism, one of 2 suspects whose apartments were raided this morning.
Shortly after the bombing, a man in Austria named Rudolf, who was a big BVB fan, he noticed that something strange was going on the stock market related to the team's shares. He emailed the lawyers of BVB, who then forwarded that email on to investigators. The email stated that someone had bought 60,000 BVB put options, a wager that the value of the shares of the team would fall below a certain amount at a certain date.
Why would someone buy that ahead of a match and then 3 bombs go off? Something isn't right here.
For the person to make money off of that, it required the stock to go down quite a bit in a fairly short period of time. And it wouldn't just be the team losing a match, it would require something much bigger than that. There was another big red flag about this purchase, which is the fact that it had actually been made, number one, on the day of the bombing, but also from an IP address that had been traced to the actual hotel where the bombing had taken place.
When 3 explosions targeted the bus carrying the Borussia Dortmund footballers on April the 11th, written notes left at the scene claimed the attack was the work of ISIL. The truth, as is now alleged, is remarkable.
On April 21st, the police arrested a man in a southern German city called Tübingen. He was on his way to work, and his name was Sergei Benegold. He seemed like an unlikely suspect because he had no known connections to the Islamic terror world. He didn't seem like a far-right extremist. He didn't seem like a left-wing extremist either. He seemed to be a completely unremarkable young man.
A 28-year-old German-Russian man, named only as Sergei W., stayed in the same hotel as the players on the night before the bombing. He specifically requested an upper room overlooking the bushes where the explosive devices were hidden.
The media dissected why he would do that, what was his past.
He had been inspired by the 2015 terror attack in Paris. And he noticed that in the aftermath of the attack, the stocks of French companies went down. And he believed that if an attack took place that was directed at a specific company, that the decrease in stock price for that company would be even more dramatic.
It never occurred to anyone that someone would do that out of greed.
We now know that the suspect bought 3 different derivatives on the Borussia Dortmund shares. With all these derivatives, he bet on falling shares. The suspect bought the majority of these financial products on the 11th of April, the day of the attack.
If the plot had been completely successful and the stock had reached a value of 0, Benegold would have made up to 570,000 euros, or the equivalent of about $608,000. Ultimately, the plan completely backfired.
The attacker, Sergei Benegold, didn't make any money. In fact, he lost money.
In court, he would be extremely quiet. He usually kept his hands clasped together. One of the lawyers actually commented that he had never seen a defendant act so calmly. Benegold had served some time in the German military. From that information and from online research, he was able to figure out how to assemble remote detonated bombs that would do what he hoped to do. There were a few days of extremely emotional testimony, including the soccer players who described doubting whether or not they could ever play another game again.
It brought everything back up, and it didn't quite help them to kind of process what was going on.
Throughout it all, he sat there completely silent. The big mystery that was swirling around the trial was the question of why he may have simply done it because he wanted to impress a woman. Rebecca is a young woman who has a very troubled home life. She ultimately sees her relationship with Weinergold as an opportunity to leave that troubled home. Weinergold is a Russian immigrant to Germany. He speaks with an accent. He has anxiety in large groups of Germans. She begins to resent the fact that he has these fears and feels a little bit trapped. Rebecca attempts to dump him on multiple occasions, and he threatens to commit suicide if she leaves him. Weinergold apparently told Rebecca that she would soon be seeing a surprise. After being dumped via text message, he apparently began planning for this attack in earnest. Weinergold was charged with 28 counts of attempted murder, which carried a maximum sentence in Germany of life in prison. He claimed that he had nothing to do with the attack, but as time went on, he admitted that he had actually been the person who had built the explosives and had set them off. But he claimed that he didn't want to actually kill anybody. Ultimately, Weinergold didn't receive the harshest possible sentence. He was given 14 years in prison, but it's still a considerable amount in jail in Germany.
The threat of an asteroid hitting Earth is very real. If it's big enough, it's also very final.
These are very, very infrequent events. The probability is not zero, though.
A blinding flash of light streaking across the sky.
About 100 tons of space rock falls on Earth every day. Most of it is so small it burns up in our atmosphere or lands unnoticed away from major populations. No human in the past 1,000 years is known to have been killed by a meteorite, and according to NASA, no large object is likely to strike the Earth any time in the next several hundred years. However, one thing is certain: we haven't found them all.
There are thousands out there, and we don't know where they are.
There are a lot of asteroids in our solar system. They number in the billions.
Scientists all over the world are working toward detecting and deflecting the most catastrophic of natural disasters.
The race is on to find as many of these objects as we can.
We have a way of calculating whether or not an asteroid is potentially dangerous or not.
I mean, I think it's something worth investing in. It's our existence at stake, right?
Amy, let's get this one out of the way. It's probably the question you get asked the most, but how scared should we be?
Asteroids and comets are a natural hazard that's out there like a lot of other natural hazards. These are very, very infrequent events, these collision events, where an object actually impacts the Earth. The most important thing that we need to know about asteroids is when the next impact is going to happen and how bad it will be. What we know is that an object that's about, say, a kilometer across is capable of causing very, very wide devastation across the planet, really, truly global devastation. The object that wiped out the dinosaurs was somewhere in the neighborhood of 5 to 10 kilometers across, so even bigger than that. At a kilometer, it's still going to be very bad and it will have global effects. For objects that are capable of causing what I would call sort of regional damage, kind of a large major metropolitan area, a city and its surrounding environment, sort of around 100-ish meters. It depends on the details of the composition and so forth.
By the 1980s, NASA was cataloguing near-Earth objects. In 1994, stargazers watched as comet Shoemaker-Levy 9 hit Jupiter. The resulting zone of chaos was estimated to be as large as the Earth, and the event became a turning point in the search for asteroids and comets in our solar system. In 1998, Congress tasked NASA with finding 90% of asteroids and comets 1 kilometer wide or larger. Soon after, Hollywood blockbusters Armageddon and Deep Impact brought attention and fear to the masses.
The great news is that the vast majority, more than 90% of all the really large 1 kilometer near-Earth objects have been found. The challenge now is working down to these smaller sizes that are still quite capable of causing a lot of damage, but they're just harder to spot because they're fainter, they're smaller.
Can you give us a sense of how many are out there in our solar system?
We know that there are a lot of asteroids in our solar system. They number in the billions. Most of them, however, are between Mars and Jupiter in what we call the main asteroid belt. This is a region of space where most of the asteroids in the inner part of our solar system live, and they stay there for many billions of years. There is another population, though, that kind of leaks inward and gets into the region somewhat close to the Earth, and we call these near-Earth objects. We think that there are millions and millions of near-Earth objects that are out there in the total population. As of today, we know of sort of around 20, 25,000, something like that. When we first spot an object, we really know very little about it. We just see something moving across the sky. So all you get is just sort of a handful of snapshots, just enough to be able to tell that this isn't an asteroid that we've already seen before. And then once we can calculate the distance to it, we can now start to make predictions about its true size. Is it large or is it small? So we have a lot of information that we have to get pretty quickly to really understand what's going on.
Finding asteroids is just one piece of the puzzle. Planetary scientists are extremely skilled in determining the orbits and speeds of asteroids based on relatively small amounts of data. NASA runs simulations of the trajectories asteroids could take, which is useful but time-consuming. A team of scientists in the Netherlands have found a way that could buy us more time.
Our method is very quick. So you can very quickly get an assessment of whether or not the object is dangerous or not. If you look at the classical way of determining the danger of an asteroid, it may take days of computing time on very big machines to determine this hazardousness.
The current problem is that there's just too many asteroids out there to spend a huge amount of computational power on all of them. So the neural network allows us to focus on what really could go and pose a hazard to Earth.
A neural network is a computing system that mimics the way the human brain operates to find underlying relationships in a set of data.
By training the network in this way, you train it in recognizing those objects that are most likely to hit the planet. And once it's trained, you can apply this network to all the unknown asteroids. And then you can make a selection and saying, hey, these are the ones which appear to be having orbits similar to the ones which we know are hitting the planet. That doesn't mean that they do, but it only means that they look very similar to the ones we know they do.
What else did you find? Should we be particularly concerned about anything?
One thing that we did find is that our neural network was able to go and identify a handful of asteroids which weren't considered potentially hazardous, that when we went and integrated them forward in time, they came quite close to Earth.
We find a handful which were not detected before or not considered being dangerous before, and we think they are potentially dangerous.
It's very hard to simulate kind of going forward in time an asteroid that's going to hit Earth because, well, the Earth is really small. And space is really big, and then you have to have very exact parameters to shoot an asteroid that goes and hits exactly Earth. And then Simon had the ingenious idea of not even trying to do that and just launching the asteroids from Earth's surface and integrating backwards in time.
It's very hard to make it hit. So you need a lot of calculations which all end up in nothing. And the idea was then like, well, let's not do that. This is basically what NASA is doing. NASA is taking an asteroid, making multiple copies of them, shooting them all forwards in time, calculating their orbits, and then see what fraction sort of gets close to Earth. Not even hitting Earth, but getting close to Earth. And that they call it a potential impactor. So you calculate the solar system forwards in time for, let's say, 1,000 years. And then you launch asteroids from the surface as if they, if you go forwards in time, would fall on the surface. You calculate them backwards to today, and then you get your orbital parameters of today's asteroids, which you know will land on the planet. And those you can use as known impactors and compare with all the other asteroids in the solar system.
Can simulations and AI, can those things fill in the gaps where perhaps telescopes and other imaging tools can't?
Absolutely. Since the observations get more complex, the physics gets more complex. And if the physics get more complex, the mathematics becomes more complex. And at some point, you can't solve your problems analytically anymore. And then this is where the computer comes in. Now we have this trained neural network. We have a way of calculating in a fraction of a second whether or not an asteroid is potentially dangerous or not, and therefore deserves more attention or more time to spend on for really finding out if it is dangerous.
When it comes to hunting asteroids, time is critical.
What we can do about a potentially hazardous object depends a great deal on what we know about it and how much time we have before the encounter. We'd really like to find them when they're decades away, because the more time you have, the more options you have, and the less energy it takes to move an object aside.
It also means we might not have to resort to launching a nuclear warhead at an asteroid. Until recently, pretty much our only choice.
That's an option of last resort, in my opinion, yes. We have lots of options available. You can just simply bump into the object and just nudge it out of the way. That's one possibility, and that's kind of, in a way, sort of the simplest thing to think about, just nudging it off its path a little bit with, a massive object, a spacecraft, let's say. It's just kind of like bowling, if you will. If you have a long time or a long stretch of runway in the lane, just a very small twist on the bowling ball will make a big change in where it ultimately ends up. Another option would be something where you take a very big, massive spacecraft and you park it next to the object and you use the force of gravity as a towing rig. That takes longer, though, and you need to be able to send a pretty massive spacecraft, and it obviously depends a lot on how big the asteroid is. Other options start to get more and more complicated, and they range from painting one side of the object a white color and painting the other side dark, and then letting the pressure of light sort of perturb its orbit.
In a departure from the lab and computer simulations, NASA has real plans to rehearse kinetic impact deflection.
Okay, traders, as you can see, we need to place stop for position. We opened just a couple of, half an hour ago, yes, on Euro. Let's place stop for our position at 108.83. Okay, it will give us 500 pounds in profit. And for you, you will secure the price. You will not lose money on this trade. Okay? By the way, new dates right now, new date, just one number, available for a webinar. So if you want to register, let me place stop. Please go to our website and register for a webinar. You can get the strategy. The price include strategy as well, and it will be live webinar, so you can ask any questions you like, and I will answer to all of your questions regarding how we trade, how we make profit. Stay safe, guys.
A war is such a crisis in Europe. Huge joint bond sale is the wording that comes across the Bloomberg terminal on that particular story that Matt was referencing. Fiscal burden sharing really being brought into reality by first a pandemic and then by war on the continent.
Well, we're seeing it, and it was predicted by David Foulkes-Landau, who's a real student of not only of European economics, but the political economics that goes with it. And Foulkes-Landau was heated, I'm going to say 7 days ago, in that we will see a fiscal stimulus in Europe that we've never imagined. And, you know, I'm not willing to say it comes off the 50s and the 60s after Konrad Adenauer, but I will say that we've seen a fiscal stimulus beginning with this bond announcement.
And finally, Tom, of course, fiscal stimulus, the previous argument was that had led to inflation. Now we're worried about commodities leading to inflation. What charts are you watching on that front?
I think nickel is the front story here and what the London Metals Exchange is going to do with it, but there's many others as well. I actually looked, Kaylee, this morning at the actual electric bills across all of Europe, and I found it just absolutely extraordinary to see the percent change we're going to see in Italy, in Spain, maybe with Spain leading the way. It's something, Kaylee, Americans have no understanding of.
Well, Americans are paying record prices at the pump, but right, everything is relative, Tom. Thank you so much for joining us, Tom Keene, co-anchor of Bloomberg Surveillance. Looking forward to the coverage coming up. And of course, in the meantime, Matt, we continue to watch these markets, not just the commodities complex. You're also seeing a lot of selling pressure in the global bond markets, and that all comes back to inflation fears.
Yeah, absolutely. I mean, we see it in the belly of the curve here in the U.S. You were showing the New Zealand 2-year, but even 10-year treasuries are up 5 or 6 basis points. I think that, you know, the nickel story caught us by surprise overnight and is so interesting, but it's really an anomaly, Anna, isn't it?
Okay, guys, I want to move on our stop to 108.88. Please change your stop for your profit. It will give us £1,000 in profit. 108.88. Okay, we moved stop to 108.88. We're already £1,000 in profit. I'll speak to you later, guys.
Is this going to primarily be chips for your own business, or is this going to be more centered around the foundry business and external customers?
It's going to be both. And what we said today is we're announcing 2 fab modules. It's a large location, 1,000 acres, because I'd hope to build out a full 8 fabs or more on this location. And, you know, if we do that full project, it would be $100 billion over the course of the decade or so. So a massive project. Initially 3,000 jobs, 7,000 construction workers, supply chain, et cetera. I mean, this is just fabulous. And the products will be our most leading edge chips. So as we said, this will be the angstrom era when we're going to 2 nanometers and below into the angstrom era. So it'll be the most advanced chips, potentially the largest manufacturing location in the world. We'll use its output for our internal products, but also for those of the foundry customers as well. So it's going to cover both.
A lot's happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
full exacerbation of those inflationary pressures over the last couple of weeks.
We have to keep an eye on the resiliency of the consumer in here and whether or not that holds up.
We don't actually have a lot of visibility on how things play out.
We were in a commodity squeeze already before all this happened, which is why it's so dramatic.
Ultimately, you will see higher rates, and it will be as a result of the higher inflation pressures.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
From New York City for our audience worldwide, good morning, good morning. This is Bloomberg Surveillance live on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. Futures up 0.33%. Big price action this morning, TK. The government response brewing in Europe, and wow, the corporate response has been something else.
It's deceptive, John. There is huge news flow this morning. It's going to be really exciting on surveillance, including the Secretary of State speaking maybe a number of times before a visit with Mr. Macron. But, John, the headline flow and how it wraps into a market, it's not a flighty market, it's a market worldwide in shock.
Tom, the news out in the last couple of minutes, the statement from Royal Dutch Shell. Let's go through it. The CEO, Ben van Beurden, someone we've caught up with time and time again over the years, apologizing for buying Russian crude, then coming out with a range of responses, including immediately stopping buying Russian crude on the spot market, Tom, and then looking to phase out the whole thing completely.
And this goes back in time. I mean, we should trot Daniel Yergin out this morning to give perspective on this, John. This is a company with the two geographies. They've been battling on that for years with some real mediocrity, but always a great respect for their ability to produce. I look at them somewhat like Chevron, and here they are pulling out, and they're doing it after the fact. They're like a week late. And they apologized.
We're sorry. We're sorry. And Lisa, Congress right now coming together, coming up with a framework to push forward and ban Russian crude. The market's already there, isn't it?
Well, is it? Actually, that's a great question. Has the market fully priced in full sanctions by the U.S. on Russian oil, or is there more to go? And that's actually been one of the debates down at CERAWeek that's been held right now in the south of Texas. Right now, we're looking at a market that is, a lot of people perceive is going to be roiled even more, especially as you see Europe possibly getting retaliated against by Russia with cutting off the Nord Stream 1.
Corporations lining up to pull back. Will Russia respond? Tom, also got to talk about the talks between Xi Jinping, Macron and Schultz. Tom, that coming from a report out of China in the last 30 minutes. What did you make of that?
To me, it's tangential, but nevertheless, there it is as part of the flow. It'll be interesting to see how the Chinese address what's going on in the West. There is the fallback for our American audience into a debate over what President Xi is learning about Taiwan versus what we're seeing with the Russian army. But I would really underplay that, John. To me, what's really important here is the response of Mr. Putin this Tuesday.
The response to the market, we head south yesterday, down almost 3% on the S&P 500,
wow.
The biggest one-day drop since October 2020. Futures right now up 1/3% on the Nasdaq 100, up a little more than 1/10%. Into the bond market, yields climbing by 7 basis points, back on the up, 184.39. Yields higher in Germany, lower in Italy. As we start to talk about, Lisa, putting together a joint debt fund again to do something about energy, do something about defense in the EU.
And this comes after the $2 trillion plan that they put out to fight to combat the pandemic. Now this, let's see how much political support this is and potentially how much this could boost growth in the region. I mean, how much is this the contrarian trade for the euro? Here's what I'm watching today. It is day 2 of CERAWeek. It is its first in-person conference down in Houston in the United States. Here is a massive slew of incredibly important names to listen to at a time when the commodity sector has been roiled like never before. On Bloomberg Television, Ryan Lance of ConocoPhillips, Alan Armstrong of Williams Companies, as well as Michael Smith of Freeport LNG, all coming together to talk about what the view is. Yesterday, a lot of very interesting statements, some scathing remarks about this administration's approach to domestic production, as well as calls to double the amount of reserve releases that have already been committed by the U.S. and its allies to try to get some price stability here. You've seen prices continue to climb to new post-2008 highs in the crude market. Today, Secretary of State Antony Blinken is doing and continuing his tour of Europe. He is now in Estonia. He's heading to France. He will be meeting with French President Emmanuel Macron. How much do they talk about that plan to sell debt by the Euro region? How much do they talk about alternative methods to get gas at a time when, frankly, Germany has come out and said they really cannot not rely on Russia. They need Russia's gas, and how are they going to support themselves while they really try to transition to a new energy future. And the U.S. Treasury Department, this is for you, Tom, is planning to sell $48 billion of 3-year notes. This comes at a time when people are still pricing in about 6 rate hikes this year. How much do we get pushback to that idea? How much do we get more demand than expected or less as people look to a stagflationary type of environment, John?
Lisa, thank you. Thank you very much. Team coverage starts right now with Joe Matthew in Washington, Maria Tadeo in Brussels. Maria, first to you. The plan that is brewing in the EU, just how big is this?
Well, it's in the works and we don't know the details, but I think a good comparison would be the pandemic response. Remember, this was the huge billions of euros plan in which the European Commission and the European institutions, this is top AAA rated debt, would go to the markets, top markets, and then, of course, pay out to the different countries that make up the European Union. So what I hear is that it could be something in that same region. The number is still floating, and I would lie if I gave you a specific number, but it essentially is a repeat of that mechanism that we saw put together for the pandemic. What changes here is that they want to deal with this, or they want to use this for defense spending and energy. The timing of it, what I hear is that by the end of the week, when European leaders meet in Paris, they want to give the political okay to this, and then it's up to Ursula von der Leyen, the head of the Commission, to work out the technical details and, of course, try to create a market for this.
Maria, the Secretary of State is doing the walkthrough, very Kissinger-like. He's in 8 cities in 8 days. I guess maybe not even 8 days, 4 days. If he is telling them that we are going to limit our oil from Russia, how will the Europeans respond?
Well, Tom, it's hard to say the Europeans, because Europeans are divided on this, especially because energy policy here is very much split by each different country. There's some that are very good on renewables, others that are still very much hooked on coal. Then you look at Germany with a big problem of gas. German very much still dependent on Russia. And then the French that have said we're going to triple down on nuclear. So there isn't a single response. If you look at the countries that Blinken has visited, which are the Baltics and Poland, he's probably heard a positive response. I know that the Polish and the Lithuanians are all in for this. They say we need to unplug from Russia. It is blood money at this point if you do business with Gazprom. Whether or not he gets the same response from Germany, that's a very different scenario. And when he sees Emmanuel Macron today, I guess he's probably going to have a positive response too. The French do not want to depend any longer on Russian gas or oil. They say this is the era of European strategic autonomy.
Well, meanwhile, Joe, in the United States, there was this bipartisan approach to sanction, to ban Russian oil. Is this a repudiation of President Biden's approach, or are they working together on this?
Well, it's an interesting question because the president is concerned about presenting at least the perception of a crack in the alliance here after he spoke yesterday with the leaders of France, Britain, and Germany. I think Congress feels like it just needs to do something after failing to reach agreement on anything ahead of the invasion. And so it's a similar approach to not only banning oil, but they've added a couple of other things here. The Russian crude ban, along with an effort to kick Russia out of the World Trade Organization, empower the president here as well to add tariffs to Russian and Belarusian imports, but the president could still act on his own and may decide to do that, if only to preserve some flexibility on the way out here. If the president imposes a ban, he wants to be able to undo one at some point if that time presents itself.
Let me ask the bipartisan question, Joe. What are we waiting for? How does the White House respond to that?
Well, again, this is a delicate situation. You also have refiners who are asking the administration to give them some sort of transition period here to find replacements for the crude oil.
Joe, come on, that's paragraph 42, page 3. There are children in Mariupol on the shores of the Black Sea, as we speak, dying of dehydration. What are we waiting for?
Well, you don't have to convince me of it, Tom. This White House is one that is concerned as well about gas prices, making the midterm election season even worse. But I would say that this is also distracting the conversation a little bit about the funding that this White House is working on as well. The number, Tom, has gone from $6.5 billion a week ago to now $12 billion. And it's not just refugee management we're talking about here. This would pay for fighter jets that would replace the MiG-29s that that Poland is now considering giving Ukraine. There was an important op-ed this morning in the Washington Post. It went up last night, actually, by the foreign minister of Ukraine, Dmytro Kuleba, who has spoken to us here, of course, on Bloomberg. He says we need aircraft. We need effective air defense and missile defense systems. That could be argued to be the #1 need right now for the way we're going to help Ukraine as opposed to, deal with this political situation here at home.
Joe Matthew, thank you, buddy. Always good to catch up. Catch up in the next hour alongside Maria Tadeo in Brussels. One of the moves of today has been on the London Metal Exchange. Tom, nickel through $100,000 a ton before pulling back again, and ultimately the LME suspending trading. TK, take your pick. We've got a massive short squeeze. We've got margin calls in the mix. We are all over the place.
David Fickling of Bloomberg is always brilliant, and he's written the primer on this, John. I put it out on social. I'll do it again here, folks, as I get time. John, what's so important here, it's a classic short squeeze. There's a given it's going to come in as well. Can you explain why they shut down, John? I still don't get it.
TK, I don't know either. People missing margin calls, Lisa. In fact, they were given an extra 24 hours.
I'm on the other side of the trade, and I've made a profit,
Tom,
John.
I get it. I understand the frustration. I totally get it. I can't make up excuses for them. They need to explain themselves. But Lisa, that one Chinese bank that missed the payment, I understand yesterday. Do we now understand they made that payment?
I don't know.
I think I've seen that headline.
We now understand that they actually got a loan from the LME and an extension. How much is this LME's credibility? But beyond that, John, you asked about things breaking and the margin calls and the short squeezes. And it's not just in nickel, which is a pretty niche market. It's also much further beyond. I mean, even coal. I was struck by Peabody, one of the U.S. miners here, actually losing money, having to take out a loan in order to cover some margin calls because they were trying to hedge their exposure to the base to coal. It's just kind of amazing.
That's something Tom's been hyper-focused on too. What's going to happen with some of these big names? Futures up 1/3 of 1% on the S&P, on the Nasdaq up almost 1/10 of 1%. Yields are climbing this morning, up 7 basis points. Crude is too, up 2.5% to 122.46. Shell bought some Russian crude at a steep discount. They've apologized for it, and now they're planning not to do it again. From New York, this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. The Pentagon says that security assistance from the U.S. and allies continues to flow into Ukraine. A Defense Department spokesman says Ukrainian forces are using the aid effectively. Meanwhile, the U.S. believes Russian forces in Ukraine are facing morale, supply, and fuel problems. In Congress, key lawmakers have announced the outline of a bipartisan bill to bar imports of Russian oil into the U.S. The House could vote on the proposal as soon as Wednesday. Russian oil makes up about 3% of U.S. crude imports. American refiners have been lobbying to make sure any new import controls do not apply to deliveries that are already in the works. Meanwhile, Shell says it will stop all spot purchases of Russian crude oil and it will not renew long-term contracts. Shell also will shut its service stations, aviation fuels, and lubricants operations in Russia. CEO Ben Van Beurden said the decision last week to buy a cargo of Russian crude was not the right one. And the London Metal Exchange halted trading in its nickel market after an unprecedented price spike. Nickel rose by as much as 250% over the past 2 days alone to hit record highs above $100,000 a ton. That left brokers struggling to pay their margin calls against deeply unprofitable short positions. And households in the UK are facing the biggest drop in living standards in half a century, according to the Resolution Foundation. Soaring oil and gas prices triggered by the invasion of Ukraine could see inflation exceed 8% this spring. That would cause typical incomes to fall 4% in real terms. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
What's happening on Wall Street?
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights
David, you just hit the nail right on the head.
from businesses most influential and instrumental.
And that's the way you run good risk management.
But we need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
If you do any kind of business in this country, there's a pretty good chance that you're going to see that business registered in Delaware. Why? Because that's where you do it. And our point was Wyoming can be that venue for blockchain enterprise, for crypto.
It's not the Wyoming way to sit around and wait for change. We want that independence, we want that freedom, we want that individuality. And that's a common theme that brings together bipartisan support for this in Wyoming.
We want to make sure that people understand, especially in Wyoming, but as the United States as a whole, this trend is coming. It's not going to stop. This is more of a small town that's growing into what I would call the cryptocurrency version of Silicon Valley.
It's the philosophy of that rugged individualism, the independence, and the ability to really get things done for yourself and control your own destiny. You get that from a blockchain, and you don't get that without it.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds. Big things are happening on Bloomberg in March. First, Bloomberg Triple Take, breaking down the day's biggest stories.
Today's Triple Take focused on the energy transition.
Then, the return of Bloomberg ETF IQ.
The last major holdouts of the ETF revolution.
And the debut of Bloomberg Crypto.
The CEO of Binance weighed in.
Finally, David Rubenstein brings you insights and advice from the world's greatest investors on a new season of Bloomberg Wealth. All this March, right here on Bloomberg.
Russia a pariah, destroying in the space of a week 30 years of international openness and opportunity.
Secretary Blinken speaking in Estonia this morning after speaking in Latvia yesterday. He will go on to France a little bit later this morning. From New York City this morning, good morning. Futures kicking higher by 0.2% on the S&P. On the NASDAQ, we're down around about 0.1%. A ton to talk about in this market, Tom. Let's start with the commodity market. 122.88, up almost 3%. The American government, Congress, talking about pulling back from Russian crude. Shell's already there, apologizing this morning, Tom, for buying Russian crude at a steep discount.
Here's a dynamic on the commodity front and also on the market front. John, we can look at any number of statistics. We'll do that through the data check. Maybe I'm stasis with Euro Swiss, but what I know is the politics, maybe, John, is front and center today. The Secretary of State, John, speaks 130 miles from the Russian border. I don't think for Americans that's really understood. In the northern Baltic state, across from the Gulf of Finland, from Helsinki, he is right next door to Putin as he speaks.
Well, Tom, that sleeve of countries that you identify, Estonia, Latvia, Lithuania, that go up against the eastern side of NATO membership, Tom, they will feel very vulnerable at the moment, I'm sure.
Well, there's no question. As Strivitas and Bloomberg Opinion here a couple days ago said, look, it's simple. We need boots on the ground. He said America's got to really recommit from when he was in charge of the European Command, John, 400,000 troops, and now we've got 100,000 troops for whatever, and he's looking for a rebuild, including Estonia.
Tom, the executive branch has really pushed the sanctions effort. The White House has done all of that over the last couple of weeks. You just get the feeling it's Congress now pushing the White House to go that extra step to ban Russian energy?
I would assume today we see something, but then what do I know? Joe Matthew, I thought, with a good brief, and maybe he'll have that tonight at 5 o'clock. Right now, let's keep it going here as the Secretary of State speaks. We'll continue to follow those headlines. And Margie Patel joins us, Senior Portfolio Manager, Allspring Global Investments, with a crisis she and I have never seen. Margie, how has your day-to-day changed in this crisis versus the other 42 you and I have enjoyed over the years?
Well, I think this is very much like COVID, where suddenly the Russian invasion came like COVID out of the blue and has really shaken the whole world. And with the correction we've seen in the market, the volatility that we've seen, that says to me, I'm frankly looking for opportunities to invest for when the market recovers from this. I expect this invasion crisis to be relatively short term, so I'm really looking ahead to a pretty favorable financial backdrop, actually.
You are singular in choosing equities with income characteristics over fixed income assets as well. Are you finding those opportunities in the quasi-fixed income equity market, or do you have to buy coupon?
Well, I think both. I think a lot of equities have really gotten hit. Equities that went up a lot got hit. Equities that lags got hit. So there's a lot of opportunities across the board, especially if you think, which I do, that any rate rise initiated by the Fed is going to be very, very slow and disappointing market participants. And then I think really high yield is very attractive here. It's had a mild correction, but defaults are under 1%. That's a historic low. And they offer 3 to 5 percentage points more than treasuries. So I think that's enough cushion that even if we have an increase in defaults or a little bit of volatility, for a fixed income only investor, I think that's really a pretty good buy right here.
Margie, it's impossible to handicap Vladimir Putin's mood swings. It's impossible to understand when exactly we could see an end to this conflict. When would you have to see an end to remain as constructive as you are?
Well, I think we've already seen the beginning of the end, frankly, so that's why I'm so constructive. If you look at the attacking army has lost 3 generals in less than 2 weeks, what else do you need to know about their strategy as far as I'm concerned? So all the rest of it is just where the market opportunity is. How does the huge volatility spikes we've seen in commodities, how does that relate to that sector, the rest of the market, and what will that cause the Fed to do? I think very little in reaction to that.
So, Margie, you remain constructive even if the disruptions that we have seen in the commodity market continue, even if we do not get a retracement of some of the wild moves that we've seen over the past few weeks?
Yes, because historically, commodities have been very, very volatile. We've had a period where they've been relatively smooth. So I think that's just the way commodities are. And again, you have to look for where the long-term opportunities are.
Margie, thanks for being with us. So much happening. Margie Patel there of Allspring. We did mention that unit of China Construction Bank, which faced a margin call at the LME yesterday on nickel. Lisa, you went through some of the substance of that. We can now confirm, according to a person familiar with the matter, that they have paid the outstanding margin call relating to the nickel positions on the London Metal Exchange.
And they had gotten an extension from the London Metals Exchange to make that payment, which is actually unusual, as a lot of commodities trading houses are trying to shore up their balance sheets and get credit lines in order to buffer against similar moves. But it really raises questions about the London Metals Exchange's ability to prepare for events like this when we're seeing swings that we have never seen before in magnitude.
John, I thought last night Jack Farchi, who wrote that wonderful book with Javier Blas, had the definitive article, and he mentions in there in a paragraph, John, I need to be careful here, that it's been previously reported that a Chinese entrepreneur, Zhang Guanda, I hope I'm not butchering that, known as Big Shot, had a large short position. So this is the bank, John, holding the margin responsibility for one of their customers. It may be Zhang, it may not be. We don't know that for sure, but I don't want to tar and feather the bank here of China versus their customer relationships.
Well, I can tell you the LME facing a mega short squeeze for nickel. The move we've seen overnight has just been absolutely phenomenal. At one point, Lisa, going through $100,000 a ton before coming back. I mean, the moves over the last 2 days, Monday, Tuesday, huge.
Unprecedented, right? 250% surge in 2 days. These are unprecedented moves fueled by margin calls and short squeezes. But The moves that we saw in oil yesterday were also unprecedented. I mean, yes, nickel is sort of a little bit more esoteric and less mainstream than, say, oil, but you're seeing similar massive moves, which is the reason why it's important to focus on these margin calls and short squeezes, especially because even the producers of these commodities have to hedge against them and are going to be called out and caught short if you see the violence in some of the price action.
Well, that word unprecedented we've used a lot over the last couple of years, haven't we? To see this statement from Shell this morning, Tom, this quote from Ben van Beurden, the CEO, we are acutely aware that our decision last week to purchase a cargo of Russian crude was not the right one, and we are sorry.
Yeah, and Jeff Sonnenberg up at Yale was out the list. I don't know if the list has been updated. I saw the list maybe 2 days ago, but Jeff's got a list of companies that have acted quickly versus those that are taking their time. And, I think the lights are really bright here for a lot of C-class officers.
Well, so much for the energy carve-out. Shell this morning announcing their intent to withdraw from Russian energy, Tom.
You brought
what
it up,
energy carve-out?
You brought it up before I did. It's like soft sanctions. I mean, that's the reality, and it's something new.
Crude, 122 on WTI on Brent, 127, higher by around 3%. From New York, heard on radio, seen on TV. This is Bloomberg.
this going to primarily be chips for your own business, or is this going to be more centered around the foundry business and external customers?
It's going to be both. And what we said today is we're announcing 2 fab modules. It's a large location, 1,000 acres, because I'd hope to build out a full 8 fabs or more on this location. And, if we do that full project, it would be $100 billion over the course of the decade or so. So a massive project, initially 3,000 jobs, 7,000 construction workers, supply chain, et cetera. I mean, this is just fabulous. And the products will be our most leading edge chips. So as we said, this will be the angstrom era when we're going to 2 nanometers and below into the angstrom era. So it'll be the most advanced chips, potentially the largest manufacturing location in the world. We'll use its output for our internal products, but also for those of the foundry customers as well. So it's going to cover both.
London, in Sydney, in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
To recap the headlines.
You do not want to miss this
How
story.
are you thinking about those dynamics?
We've just had the biggest one-day drop on the S&P going back to 2020. We unwind some of that this morning. Good morning to you. Up 0.4% on the S&P, on the Nasdaq up 1/10 on the Russell. The small caps up 0.7%. Secretary Blinken just moments ago reiterating and repeating it is an active live discussion within the administration to implement an oil embargo on Russia to ban the import of Russian energy. Let's see where that goes. For the moment, the market's heading in that direction. Switch at the board and look at crude. Brent this morning, WTI climbing higher. Brent 126.84, just short of 127. This is Shell buys Russian crude last week at a steep discount, then apologizes for it and follows up by saying, we're planning not to do it again. That's the moment we're in for energy. Never mind the sanctions. We've been talking about the self-sanctions that these companies are in.
Okay, guys, as you can see, position closed on euro. Well done. You made profit. For some of you, I can see some of you just started trading. It's not that difficult, as you can see. Just use our strategy and you will make money. In our case, we made £1,000. This is where we stop. Let's move on. Let's see what other opportunity will give us 8th of March, 2022. Stay safe, guys.
Yeah, and yesterday was pretty grim for some of those names. So what does it mean for the Fed? Well, let's take a look at the front end of the yield curve. Switch at the board, 2s, 10s and 30s. 2s, the high of the year intraday, just short of 163, in and around that level. Right now, 161.29, up 6 basis points. Tom, we're back on it. North of 160, going into CPI on Thursday,
right,
and
the
Fed next week.
Well, there's CPI on Thursday, and of course, that inflation statistic is something to talk to Claudia Sahm about, Director of Macroeconomic Research at Jane Family Institute. Flat out one of our most popular guests. When she's out, social media lights up like a candle. Claudia, I want to talk to you about inflation in a minute, but I need to pause. As a young Turk out of Michigan, you put out your shingle in Dresden, Germany, long ago and far away. You have lived East Germany. Tell us how you perceive the Germans will respond if Mr. Biden limits the import of Russian oil to America.
Right. I think we all should be responding, and I do hope that the President of the United States steps into his leader of the free world role, and where we lead, Europe will go. Right. We have a war in Europe. We have crimes against humanity. Germany knows what that means more than anyone. So I do think people will step up to the plate, and we need policymakers to find ways to, even after we cut Russia off, to help get gas prices down. And there are many, many ways we can do that, because we have to recognize this is going to be a shared hardship, but we don't have to make it harder than it has to be. So I think we'll rally, but I don't know what people are waiting for, right? Like there are Ukrainians being slaughtered. Like you just do it. Let's get going here.
Claudia, on the inflation front, we must turn to that. You're out of the Michigan Combine, where there's been a huge study of inflation going back over decades. What can a president do about inflation?
Right. There is a long list that I have been compiling, crowdsourcing on Twitter even, right? And we need to get creative here, right? Like one thing that has not been talked about, but certainly hinted at already in your opening, is we need to get corporations, big oil and OPEC, we need to lean really hard on them to get supply going and to stop gouging customers on the prices. We saw that in the United States, the 5 biggest companies own almost a third of gas stations in the United States. Shell leads the way, and they reported over almost $7 billion in adjusted earnings in 2021. Like, I know they got hit in 2020, but enough is enough. You made it back. So I think there is a bully pulpit that needs to be used. Cut the gas tax, the federal gas tax, and make those 5 big companies commit on national television to hold their margins at where they were before the Russian invasion, and shrink them, right? Like, let's get them back to pre-COVID.
Claudia, let's talk about the economic ramifications of where oil gas prices are right now, putting aside the politics of how to proceed from here. What is the point at which gas prices, which are currently at a record high on average across the United States, at what point does that torpedo any chance of growth in the U.S. and actually send it backwards?
So we have an economy that is really moving in the right direction. And let's not forget, on Friday, we saw 3.8% employment. We saw almost 700,000 payrolls. There ain't no labor shortage, right? Like, we are really moving in a good direction. This is not time for the victory lap. We have got to get inflation down. $1.50 more at the pump, which is what we've seen since the pandemic began, is a hardship, particularly for lower income, particularly for those wage workers that we are demanding go back to their crappy jobs. But not having a paycheck is a disaster for families. And we've seen a lot of people get paychecks back. But, you know, we got to get inflation under control. It does pinch. Okay. Americans can't really adjust how much they spend. Not right now. Like, they need gas.
So here I'm listening to what you're saying and trying to parse out what this means for Fed policy, because the way that you're framing it, it seems like, and I know that you do believe that the economy is less robust than other people do believe, that the labor market. However, we are dealing with inflation running at the hottest pace since 1981, 1982, and we're dealing with a multifaceted number of inputs into that broad inflation reading. Are you arguing that the Fed shouldn't do anything, that they should not raise rates, even though they are facing off the biggest inflationary surge in decades?
Oh, Jay Powell and the Federal Reserve officials has been absolutely clear they're going to raise rates. I am completely on board with starting with 25 basis points. I mean, we're going to get that next week, and steadily, committedly moving them up. There are interest-sensitive sectors. Housing inventories are low. Durable goods are low. They can move the needle there in terms of cooling the red-hot demand. But we are deeply mistaken if we think they can get gas prices and food prices down. I mean, they would have to tank the economy to get people to buy less gas, and they're not going to do it unless they absolutely have to, and they don't have to yet. So you know, it is going to be a rough ride. We need COVID to remain and become more and more contained. Like, that is going to be a big piece of getting inflation back down. But you know, there's going to be another wave. We better pray it's not as bad as the last two.
Well, I hope not. Let's wrap things up with this poll that we all saw yesterday afternoon from Quinnipiac. Can I read it to you? Just this quote. At nearly the end of week 2 of Russia's invasion of Ukraine, as the US and its allies consider ratcheting up sanctions against Russia, Americans say 71 to 22% they would support a ban on Russian oil, even if it meant higher gasoline prices. What did you make of that, Claudia?
We're Americans. I mean, we're protecting democracy.